Good morning, everyone. Good morning, Philly D. Good morning, Delphine. Good morning, everyone. It is Thursday, June 18th, 2026. New day, fresh start. Welcome to Pitbull Traders Morning Game Plan. I'm your host, Manny. Purpose of this show is simple. Live futures trading, real-time technical analysis, and actionable trade setups. All with the focus on building real trading skills and the mindset designed to drive consistent profitability. Every morning we come in with the same goal, to build out the structure before the open so that we're operating in alignment with the day's dominant forces. Not guessing, not chasing. All right, team, let's jump into the charts. We had an explosive FOMC yesterday. I hope everyone did well. And if not, don't worry, we'll get after it today. And let's make sure that we learn those lessons. All right, that's the most important part, I believe, in my opinion. All right, so let's jump into the higher time frame. Yes, up. Yeah, Delphine, I tried it. Yep, I tried that area. Yep. Let me just make sure that this is right. Yep. Yeah, so it's a it's setup number 6. All right, team. So let's jump into the higher time frame. Let's build out the look. As we head into today's Thursday, but really, I expect that it will behave as a Friday, right? We definitely have a shortened week, and we have some price for action that was kind of expected, but it gave us a different look on the chart, right? Okay, so let's build it out. We're going to jump into the 4-hour time frame. Real quick look at the daily. There was something that stood out to me. Okay, so what stood out to me early this morning during prep time on the daily chart was just the size of this candle. Okay, and this distribution now here at the top, right? So we're chasing and we're knocking on all-time highs again. And whether this is a topping pattern or a continuation remains to be seen. I mean, I at this point, what it is the hourly time frame, the daily chart is in an uptrend, right? We came down, we tested the 9-period moving average yesterday's sell-off after being quite extended above it, and ultimately we closed back above it, and it held as support. We came really close to the 21-period moving average, and those are sloping upwards. So the trend is higher. Okay, we have a higher low relative to our June 11th low. Okay, so if yesterday's FOMC low at 74.72 holds, this is a continuation of the upward move. All right, let's dig into the hourly chart. All right, so we're jumping into the 4-hour time frame, and what we have to be mindful of today is this a consolidation? We saw yesterday's daily print was fairly large. And just from experience and being around the ES for a very long time, I would not be surprised today if we end up with an inside day relative to yesterday's 24-hour range. Okay, I do think that we will get some solid oscillations, some solid rotations in order to trade. But this pattern here at highs, just from eyeing it up, it looks immature to me. It looks like we need to fill it out a little bit more. Okay, so we have the up thrust. Excuse me, let me start over. We had the up thrust, we pulled back, and now we're continuing higher. And we'll probably get something like this before we break in either direction. So let's frame out the edges on the hourly, right? What do we want to use, and what would signal to us a change in structure. All right, so immediately what stands out to us is obviously the FOMC low, okay? 74.72 low. Now we are putting in a higher low from the overnight session, and that has come in at 75.30. Now, the moving averages are kind of sloped down, but you can see we're pinching here, and it looks like they're about to get reclaimed today. On the hourly chart, our point of reference is the rally high from yesterday, which was 76.12. In order for there to be a continuation of the up move, price would need to breach above 78.12. And that would put us on notice that, hey, we're going to continue higher. Pullback should hold. Perhaps we get a pullback to the overnight high before the ultimate move higher. 76.12 on the upside is what we want to see breach in order to get really bullish and start looking for new highs. On the low side, we want to focus on the overnight low at 75.04, as well as the FOMC low at 74.72. This band here stands out to me all as well. 7,500, which is on the market blueprint as a bullish, kind of like a bullish above, bearish below. We're expecting weakness below 7,500, and that would be the reason why. If we break below 7,500, then no longer is what was resistance became support. Okay, so market rallied, we broke lower. On that Tuesday, we had to look above and fail of Monday's high. We gapped up through it, came back and tested it, and now we're rallying higher. All right, so let's continue to look for long trades and brace our higher time frame narrative on the hourly trend being higher. All right, let's dig into the 15-minute chart. Let's talk about our beloved most bullish scenario. We're going to talk about the most bearish scenario. Then we'll talk about the bullish trap trade as well as the bearish trap trade, which is my beloved trade. Okay, if I had a favorite setup, it would be the bearish trap trade. It just seems to be working. It's been working for years simply because we've been in this massive uptrend for the last few years. All good things come to an end, but let's just keep trading what's in front of us. We'll keep executing on the long side, and we'll go with the charts as they present new changes. All right. Hopefully I can get this. Thinkorswim has been a little bit slow on the data pull. While that populates, what we're going to do is we'll map out the most bullish scenario on this chart. Let me just make sure that oh, okay, that's the problem. I'm not on the right contract. Okay, there we go. Let's just get this prior to the 76.12 high, which was made in Globex. I want to make sure that that's front and center. I just got taken out of that trade too. I did get 2 scales out of it. All right, here we go, guys. The most bullish scenario. All right, the most bullish scenario has price opening at 75.61. And we have this shelf here from yesterday afternoon, right? You can kind of see why the market has stalled here. It came up, it's testing what was yesterday's breakdown short level at 75.65 to 75.70. All right, so let's use that reference. If price rallies above it and we break above the overnight high, now remember, acceptance is everything. We don't want to get caught buying a selling wick. We don't want to get caught selling a buying wick, right? So that's where patience and kind of temperance comes into this, right? We always want to make sure that we're monitoring for acceptance, okay? We also see that early on in the overnight session, price rallied to about 75.60 and stalled out, and then it extended higher to 68. So I think I think the prudent idea here is to use 75.60 to 75.65 for our pullback zone, okay? And so obviously we're going to be looking at using our other tools to gauge any type of, to gauge the strength and the momentum of the move. But in the most bullish scenario, price comes back, it holds that retracement into 75.65. It holds that retracement and it reclaims the overnight high, 75.68. At that point, we're looking for long trades, right? And so we're executing. If we have that acceptance, if we're seeing prices demonstrating to us is closing above the overnight high and it's reaching higher, right? We have a couple of prints there. At that point, we're looking for a long trade and targeting yesterday's value area high, 7,625. Now remember, team, right? The important part about value, right? That it's the direction of value that we have to focus on. And I'm gonna go into that a little bit more today, because if you looking at the profile chart, there's a good nuance in yesterday's price action. That we can share. Okay, so the most bullish scenario, price pulls back to 75.65, 75.60 into that area, and we extend higher. We're looking for long trades above the overnight high with closes and momentum to get us up to value area high 7,600. And now we can immediately see that there's going to be some froth on that trade because the overnight high 75.68, value area high 7,600, right? So there's about 30 points in that trade. So plenty of room for movement. Okay, and there are plenty of trap shorts here at the open. All right, let's take a look at the bullish trap trade. So the bullish trap trade has us trading higher. We get above the overnight high. Again, price stalls out. We start to see those wicks develop, right? We start to see a lack of momentum. We went through this yesterday. You can see that look here on Tuesday's open, right? Where we had the selling wicks, right? Price was just unable to get above it, right? And then it finally broke lower, okay? So we want to be mindful of that. We want to wait for that to develop, and that's why having that patience is so important, right? Wait for those bars to close. Even if you're on use a minimum of a 5 minute, right? You can get faked out on lower time frames. And if you're using a lower time frame, say a 1 minute or a 3 minute, then follow that, right? Use that chart that you're accustomed to, but wait for those closes, right? If you're trading a 1 minute, a 3 minute, whatever it might be, wait for that close, wait for that little piece of extra confirmation. It will serve you well. Sorry about that. I have to close the door. Okay, so here we go. If price gets above the overnight high and fails to gain any traction, we start to put in a lower high. We're going to be looking for breaks below 75.65. And if you're going to take the trade on a close back below the overnight high, remember that your risk marker is going to be whatever the spike high was that we made on the initial push higher. Either that's your risk marker or this, right? Keep that risk tight. But remember that we have to get on that trade. The first need is to get below 75.65 to have any good continuation, any good momentum down to the downside for the bullish trap trade. All right, let's talk about the bearish trap trade. For that, we're going to move over to our right chart. Both of these time frames are the same, both 15-minute time frames. Just like to map it out. As traders, we're very visual, so we want to see these patterns. I like to have both scenarios painted for me so that I can visualize potential outcomes. All right, so on the most bearish outcome, what we're going to need immediately, we can see what stands out to us is value area low, 75.3950. So if we get a break here, liquidation break that gets us back below value, okay, then that's going to signal to us that in the overnight session, while price tried to reclaim value, right, tried to return to the prior day's value, it was rejected. All right. So at that point, we're looking for closes below. And again, ES sells very, very quickly. This can be a very difficult trade to execute, because by the time we get down to 75.39, we're going to already be 20 points, 25 points off of our overnight high. Okay, so just be mindful of it. But if it's selling, we're going to know it, right? Because it's going to pull up, it's going to retrace a little bit of the move, but then it should really quickly move lower. Look for that continuation. If that does materialize and you're in that trade, you want to see it follow through quickly. If not, just shut the front door, get out of it, stand aside, wait for more information. All right, so the same pattern. Now we're going to talk about the bearish trap trade. The bearish trap trade is going to use the same level, right? Because we have this pretty wide overnight range, okay? But it's great because it gives us these good references. And while the overnight range is relative to prior overnight ranges is not that high, a lot of this move came, a lot of this retracement came in the runoff. We definitely see that we can use that value area low level for our trap idea. All right, so for our trap, price comes down below, fades, right? Spikes a little bit lower, but ultimately reclaims and starts to move higher. We're looking for a close back above value area low, a return to value. Again, this is signaling to us that bears were able to drive price lower outside of value, but the market said, no, we don't think that that value should be lower. It's going to take price back into prior day's value area. And at that point, we're looking for breaks of local highs. We're looking to execute sharp scalp long trades to the upside on any break of these local highs. At that point, we're looking long. We're taking our scales along the way. Again, that could be an excellent trade as well, because it would have corrected the overnight inventory. So that would be sorted out. And then we can look for a continuation of the higher time frame trend for a move back up to the overnight high to satisfy the 96% statistic. Okay, so there we go. We have our bullish scenario. We have our bearish scenario. We have our bullish trap trade. We have our bearish trap trade. All right. Make sure you take a screenshot of these scenarios, as one or more tend to unfold each day. When I go back and I look at it, it's always nice to see that we have a good grip on what's going on and that we're able to stick to the process and frame out trades that follow a good logic chain and be able to capitalize on those movements. Man, I'm parched. Had a great workout this morning and I'm just extremely parched. All right. So that discusses our 4 potential scenarios. I'm going to go into it a bit today. Delphine asked me yesterday about, I was chatting with Delphine and I mentioned discussing the read on the lower high and why I thought the gap was going to fill yesterday. And we definitely got that. I will get into that again today. Then we're going to have some programming notes as we head into next week. Obviously, we have a holiday shortened week with tomorrow the markets are closed. So look out for that. We'll have some more information on what is going to be happening in the pit tomorrow. All right. Let's clear this out. Looks like we're breaking above the overnight high. So a timely exit for me there. Got my scalps out of it, executed the plan, the planned short trade for setup number 6. Now we're breaking above it. No harm, no foul. Again, there's going to be plenty of opportunities here today. Oh, nope, that's wrong. Oh, okay, I know why. I'm looking at this wrong. Okay, yeah, so the overnight range is 71 points. I'm sorry, I was looking at the wrong profile. So there's one thing I want to discuss, right? It's a nuance about market profile. We discussed yesterday quite a bit market profile concepts and how to execute and how to think about those going into the session. All right. So let's just talk about how this moved. So I got long last night on the open because in uptrends, guys, when we're closing at the low of the day, like I frequently post in the IM Pro room. I'll say, hey, if anybody, like when we're selling off hard into the close, like who's buying this? And I'm half joking because I wait for that 6 p.m. open. And I had an excellent trade overnight, and I was out of it by like 8:30. I got out of it for a nice, I got 5, 10, and then I got 28 points on the last one. So it was a nice overnight gain. And then I'm going to go into a little bit about how this Monday morning high, how I was able to make that read. All right. So why don't we just jump into this? I'm going to pull up the profile chart as we get ready to go into the open. There's one nuance that I want to point out here. Let me just stretch this out a bit. Let me know if you guys can see that. Let's see. All right, so my focus right now as we wait for the opening bell is the market profile chart, okay? And the one thing that I want to notice is that, remember, context matters. You know, a lot of traders overnight will see the daytime move and look for a continuation of that move. If we close, but yesterday, on this big sell and closing at the low, correct, right? Look at where value area low was. Look at where the volume point of control was. So all of these sellers in this thin part of the profile, right? All of those sellers, you'd have to assume that they got trapped, okay? They got trapped and they were in market profile. We're gonna call that they were short at bad prices, right? Because all of this happened below value. So we know as traders who utilize the market profile that price wants to find balance. It wants to return to value. One of the biggest mistakes that the traders make is assuming that the overnight activity represents the same conviction as the regular trading hour session. So when we closed this far below value, this is all fuel for upside. If you do not see an immediate move break, an immediate continuation and extension away from that, from that value area, you need to assume immediately your radar should go off and you should start looking for a return to value. Remember, price wants to get back to value. It wants to get into an area where it can facilitate two-way trade. All right, there's the opening bell. Let's get that opening print down. Clear up this chart. Remember, let's write down that opening print, right? We want to use that as a fulcrum for the day ahead. It's good early information. If price opens and it one or two ticks the overnight, it goes opposite. Say it opens at 7,500, it goes 74.98, but then immediately prints a big print in the opposite direction. That can frequently be a good signal that, hey, price is going to extend and we're going to print a green print on the day. 25.77 quarter. Let's get this in here. So the market. So remember market profile, right? The market last night. What we're going to follow. What we're going to be monitoring here closely off of the open is all right. So So let's discuss the context of what's going on. So in the overnight session, the market doesn't like leaving unfinished business. When a market closes like near the low, especially outside of value, it's often leaving unfinished business. Okay, so look at it like this: like the auction is not complete, and then the overnight session can become like a mechanism, like it can become a tool for executing a repair or finishing off that business. And oftentimes the overnight session is just a repair of an imbalance. So we had an imbalance yesterday to the downside, closing at we closed off the low quite a bit, but all of this range below was below value area low. So parched. So what we're looking for now is, does the market often will revisit value before it goes on to the next move. So because the market closed at an imbalance to the downside, it repaired that imbalance in the overnight session. Two great pieces of information, right? So the causality of it. The market was closing out of balance. It returned to balance and it repaired. Now, what's next? Well, is there a continue of that value higher? Do we start getting developing value higher? That's what we need to monitor for today. We're going to use our day time frame references to frame that out. So, one of the traps that traders could see is they wake up this morning and they see us, gapping up higher. We're gapping up 80 points, right? Well, not so fast. If yesterday closed below value and at the lows, right? And the first objective overnight was to return to value. Now it's repaired. That's not necessarily new buying. That's just the market coming right back into balance. All right. All right, we're moving here. Let me just get back to. I'll jump into that lesson because it looks like we might have that bullish trap trade underway here. Oh, yeah. Okay, so, yep. I'm a little bit behind here. Should have been focusing on that, but I really wanted to touch on that because it is an excellent thing to review and go through. Let me know if you guys have a couple questions here to get to. Just hang tight. I'm gonna get with you guys in just a moment. Oh man, I missed that entry, dude. Look at that. All right. Hey, did you guys catch the trade? Let me know. Hit me up. Let me go. Okay, let me get to it. Good morning, Manny. Sniper, E-Mini Sniper asks, good morning, Manny. Why does the execution clock have a blank between 12 and 2? Just follow the times. That's the pin for today. That's the time for today. That's today's series. Again, Sniper, don't focus too much on just follow those times. Those are the ones for today. You can see that today we have a 3 pivot day. We have a low, high, and a low. It looks like we're on our way to carve out that low now. All right, J Mark, big flip to the buy side. Why pop through the high? I don't know. Night. Yeah, thank you, Delphine. Thank you. So remember that, Delphine and everybody else, right? That's I think I was mentioning the day that I had a big $70,000 day, It was because of that setup. Market closed on the low, and I was stalking it right at the Globex open, and frequently very early in that session. And you will literally take no heat on that trade. We'll go over it. A couple of things I want to get to today. I also want to talk about a little bit about what gave me that read that we would fill the gap yesterday. So we'll get into that. So we've covered the market profile, like overnight inventory. I think that it was important to cover how that departure, how closing value, what that means, and how you can capitalize on it. So now, as we were discussing, right? So we cleared that, right? Repaired that imbalance by a return to value. Now, what are we seeing? Now, did price get to value, and was it rejected? Now, what comes next is what really matters, right? Because now that repair is over. So what are we looking for now? Well, we looked above the overnight high trade. I hope some of you guys caught it. I was too busy in that lesson. That's fine, because I'll get mine today. But that's a great setup, man. I hope you guys caught it. Remember that the destination is that destination, right? What does price do when it? So thus far we're in value, and we looked above the overnight high. Now we're testing the lower part of value. We still have an income, as we outlined earlier, right? For our most bearish scenario, a break below that value area, that's going to signal to us that, okay, so we've repaired the imbalance from yesterday's close, returned to value, and now the market voted and said, hey, no, we're seeking new value. It's overvalued. Yesterday's value was rejected, but we don't know that yet. I'm just painting out the scenario and what we're looking for next. So, looking at this from a pure value perspective, we've repaired the overnight imbalance. We're still in yesterday's value, right? So prices thus far, even with this big sell, it's demonstrating to us that there's acceptance within the value area. Now, if we get the break below value area low, that would be a big tell, okay? And yesterday's value area low comes in at 75.36, I believe. Just get it up again. Okay, yeah, 75.39. I have value area low 70. It should be 75.36. It's a zone, though. It's a band, so just be flexible about it. But here we go. We're moving lower. Of course, you know, this sell to us is not really a surprise, right? So we have a couple of things that could warn us about that. We knew it to look above the overnight high. Gosh, I should have executed that trade. We know that the look above the overnight high and a return to the overnight range. We know we were looking for an early morning low, as well as setup number 5, which thus far has been the high of the day. Gosh, I should have saved that lesson for earlier. Oh man, this is a great trade. Look at this 75.80. This is a 40-point trade. Dang it. All right. Well, it is what it is. I was so excited about that lesson, man. I missed it. But all right, team. So we had a couple of things that we knew that were going to work for us there. So I'm glad if any of you caught it, good on you. Happy to hear it. Just make sure that, just make sure that you, wait, what's doing that? Hang on a second. No. What the hell? I have a rogue ATA going on over here. Don't worry about it. I'm going to get it all wrapped up and get this chart down. All these screens going on here. All right, 75.37. What did we just bump into? Number 3. All right. Watch this low here. Watch this low. Let's see. I've got to get this. Let me just hang tight, team. Give me a second here to get my ducks in a row. Dang it. That was. Okay. 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 Got it good. All right, team. So we're trading back up to 75.48. Just trying to get my everything here in a row. All right, so now we got the move lower. Let's just talk about what we're looking for next, right? So we're back into value. So far, price is just demonstrating acceptance within value, right? So let's just be cautious here. Let's stay focused on what's in front of us. Let's be patient. The market has only been open 13 minutes. There's plenty of time here. I'm looking at the support area. It's too early for me. Okay, it's too early for me. Now I'm below support buy number 3. Okay, let's see if we can get a reclaim there. Let's see if we start carving out low. We know that we're testing now value area low, right? So this is an area where we want to be cautious. We want to be careful. We want to make sure that we're following, that we're waiting for those closes. We're waiting for price to demonstrate to us what its intentions are going to be. Thus far, what we're seeing is simply a overnight inventory correction. Sorry, a fix. So a fix of the imbalance during the overnight session. But now what we're looking at is that the overnight session came in with overnight inventory was net long. All of it was long, right? So we see this big liquidation break. A lot of traders are going to start getting bearish. They're going to start selling everything here, right? But no, it hasn't proved anything yet. All it's done is liquidated, reset the overnight inventory, which was net long. So you see how these cycles work? It's constant liquidity being reset, rebalanced, and then we wait for a break. Those are where the frothy moves come, is when this stuff sorts itself out and then we get a break or a departure from that area. So one repair after another, right? Let's monitor here so if we get a move below value area low, and then we'll utilize our levels. As you see, I'm going back and referencing my plan constantly as we get to these areas. I want to make sure I'm ready. I want to make sure that I'm clear-minded and that I know what I want to do if and when price gets to an area that I have planned to do business. Thus far, 75.37 is our test of our low. Now we're coming back down again into it to test it again. I like the scalp here. I like the scalp here just for a few points. I'm out. You see how they're just bouncing it down here? They don't want to go back down below value area low. I got to start trimming these though, because I'm wrong. Yep, I'm out. All right, so here, let's see if we can get a move down back below value area low. So minus 4 points on that one for me. I was just trying to scalp the bounce, and I got a poor fill at 75.42. I'm seeing signs here though that this is stabilizing, so I might try this again. Got to get in though, right near my area. What? I'm busy right now. I don't know. No. Go see Manny. I don't know, maybe she's in the back of the house. Dang it, man. My kid came in here, sorry. So once again, we tested value area low. This was one of those scenarios that I had to try it twice. All right, got the first target +5 on the value area low scalp. Okay, not looking to overstay my welcome on this. I'm just looking to take a quick scalp, right? I understand that I'm going against certain criteria here, but I'm just capitalizing on the price action. +50 cents on the last. Okay, this is a better short than it is a long. While I'm testing value area low, does that make sense? Right? I don't, because we're in an uptrend, right? Thus far, we've had a departure. We closed below value yesterday. Price returned back to value. Thus far, it's demonstrating acceptance within value. And now I'm testing the lower boundary of that value area. I don't want to be shorting into that, especially when I'm at the front end of my time window, right? I'm about to enter that low time frame window. I want to be long. I don't want to be short. I'm in an uptrend. Oh, oh man, I should have lectured that. This is a terrible fill. I'm gonna scratch it and try to get a better fill lower. Does everybody understand that? If you have any questions, let me know. Drop them in the chat. If you guys are just joining us, I'm Manny, Pitbull Traders. We're tracking the ES right now. We're talking about how the departure from closing outside of yesterday's value area and then a return back to that value area in the overnight session. And we're walking through, we're giving a play-by-play on what prices intentions might be. Okay. So thus far, price closed outside of yesterday's value area in the overnight session. Price returned to value, and now this move that we're seeing lower is a overnight inventory correction that's staying within the prior day's value area. So thus far, you know, we're thinking long trades. We're looking to the upside. We're thinking that price is showing us acceptance within the value area, and we're in an uptrend. Developing value area could be higher today relative, or at this point the same as yesterday, but that's why we're thinking on the short side, on the long side, and not short just yet. In order to get short, we outlined that scenario in the pre-market. We said we know where we need to go, we know where we need to close below, and if you know, that's an excellent way of thinking about that area is, okay, so if that's the area where I'm going to get our scenario for short, right, which we outlined in the pre-market, right? If this is the area that I got to get short and it's bouncing from here, you know, there's two trades here. You can try to sell it here, or if it doesn't go, right, I want to get long. I want to be long for the upside move. And that's what I just scalped. I'm moving away from that. I got a poor fill, so I didn't really trade it very well. My execution was a little distracted. So I took the trade twice. I lost 4 on the first, and then the second I got +5 and then +50 cents. And in hindsight, I could have just moved stop to break even or moved it below the low. I thought the low was good just from an order flow perspective. Let me know if that makes sense to y'all. If you have any questions, post them in the chat. And if you're joining us on socials, please do us a favor, hit that like button, hit the subscribe button. We're a new stream. We're trying to get our following up. Let's spread the word. And in a short while, I'll discuss what the read was and why we were looking for a gap fill yesterday. What the hell's going on here? Oh, okay. This is the ATA executing this for me. Not really. Oh man, let me make sure I have these off. Dang it. Okay. Sorry, team. Had another distraction here. Just got a couple of DMs here. Hang tight. I'm frozen here now. Dang it. Hang tight. I'll clarify in a minute. Hang tight, guys. My platform froze. I don't know why that's happening. Shit. Ninja Trader froze on me again. Waiting for Ninja Trader to load here again, team. All right, looks like we're back down testing that value area low again. Let's see if we can break through 75, 35, 50. You know, a departure from value here, a departure lower would be a big shift, guys. Big shift. That level is also a level that's on the market blueprint as well. So just above here at, you know, right now it's a little bit muddy with fair value being so wide. Oh, I really hope it closed that trade. Trying to get Ninja Trader back loaded up here again. You can see all those errors that it's printing. All right, let's see. Yeah, it's like, hang on. All right, I'm going to leave that alone for now. It's just causing me a distraction. Let me get back to the trade. So see, we keep bouncing off of that value area low, guys. Again, same read, right? This is why I was saying I'm more inclined to get on the long side, just because I'm seeing the dip as being, it's only an overnight inventory correction. That's really what it is, until we break down below value area low. So that's the only level that we're going to focus on right now. Value area low, 75.36. We'll call it 75.35 to 75.40. All right. If we can break down below there, we should scoot very fastly. But what the read is here is, this is what look at what price is doing, right? It's consolidating at the low. It's absorbing sellers. That's classic absorption. Classic absorption. All right, so I'm back up again. I had that trade on when I crashed, and let me just got 3-ring circuits here. I'll get to all the DMs in a second, team. I see your messages. Just give me a second here. I'm just trying to get my ducks in a row. Trying to manage the trade, keep the narrative going. We're at a significant inflection point. The platform's freezing on me. It's quite the busy morning. I love it though. I love it. Let's stay nothing like a 3-ring circus to keep you sharp. We need to get above value area low. Above VWAP 75.53. We want to see price get above there and extend higher. Yep, I see it. I will. Just give me a second. It's only 32 minutes in. I will talk about that for sure. Just let me get through this. I'm trying to get through this trade, and the longer we stand, the longer we hang out down here and we absorb, perhaps maybe we get that little dip below. But so far, you know, we have the overnight inventory, right? Let's just go back to our Thinkorswim chart where we've kind of framed out the narrative for the morning session. I'm gonna go ahead and start lightening up on this just because there's just so much going on right now. Okay, so early morning, we highlighted this for most bearish scenario. Looks like we could have a bearish trap trade happening. We've already had this one execute. We've already had the bullish trap trade, but now price is unable to get down below value area low. It's hanging around. It's absorption until it's not. We don't have a departure from value. Does that make sense? Okay. Yep. So that's why, right? I'm anticipating that low. I'm looking for a move higher. Again, and I want to just let me remind you guys that time is a very small component. It's an additive, right? If I had to weight it, I'm only giving time 20% of what my decision making is, right? It's always great when time is on my side, but you don't want to frame your trading and your decisions based on time. That's going to be a mistake. Don't give it too much weighting in your decision making process. It's always helpful when it's on your side, but there are many times where the time paints outside the window, or where it just doesn't line up with the structure. So you have to follow price. There are times when you could be in a trade and the time-based component, because if you would have waited for that, you'd have missed the opportunity. Okay, so always lead with time, follow the narrative here, right? So we're still in value and prices, and while we have this big push lower, right? We did get the big push lower. It was a look above a fail, but we have to frame that within the context of what's happening, right? We had an overnight inventory correction. The overnight inventory was look at where our settlement is, 74.92. Our inventory was 100% positive. We're rebalancing that now. Remember, price goes outside of balance in the late afternoon session. Price left balance. It corrected in the overnight. Right now, that overnight session is being corrected. What's next? We have our references, right? We're going to use value area low to frame out any idea on a move lower. If we're really bearish, then we should start breaking below that. Let's take a look at some other tools. Okay, let's take a look. Okay, so look, this is all right. So this is a good piece of information. Look at our AD. It's negative. Okay, our internals, our sector bubbles are so Infotech just went green. It just went green, but we're mostly we're mostly bearish here. All right, so let's hold that piece of information. Let's add it to the narrative. Let's see where price is, what structure is telling us, right? Coming into that first target at, oh, yep, it's a little bit off. So that first, all right, got the first fill, plus 5 points on the first one, plus 5 on the first, on the long off of the value area low. Absorption. Let me know if you guys have any questions about that. Man, I'm so parched this morning. And heads up, we're going to start having a new structured format. I'll be joined by Bo today. Bo's going to come on, give us his read, let us know what he's doing, so everybody can expect Bo coming on in the 11 o'clock hour. Greg Will says, is there a way to see absorption on Thinkorswim? So yeah, so on any chart, Will. So really, what you outside of looking at the order flow, right? Like looking at your dome, what you're looking for here is, so if you have Thinkorswim, then you have the tick, right? Okay, so use the tick chart. That's an excellent an excellent data point. Let me get the cover in here. I'm not looking for a home run. I'm just looking for a scalp on this one. So let's see. Let's see where am I going to run into trouble on this? What do my lows look like? Hang on, Greg. I'll get to your question in just a second. Yeah, sure. Yep. For sure. I'll go through it how you can see it on any chart, right? And a couple of tools you can use to help you. Let me just get through this trade, right? I have and the DM that you guys sent me. I promise I'll get to them too. I'm like extra thirsty this morning, so it's like talking with cotton balls in my mouth. All right, I'm going. So look, we're running into this low volume notch at 60.50. All right. You have to be cautious here of a lower high, okay? Yep, I got you. Hang on a second. See what we're going here. Let me just read this. All right, so we got up there, 75.58 quarter, 75.58 quarter, watching the delta. So how many of you are just, so when we're discussing, let's go into absorption. That's a really, really important topic, because absorption and being able to read that is really what's going to transform you, what's going to help you at the point of entry, right? So that there's a value component that I think can help out everyone there. I'm going to go ahead and take a graceful exit on this. I just want to close this down. Wait, let me just manage it differently. Right. What did I make on the first 5? And then that would be at 42. No, so then I'm not going to make 5, give back 5. I'm not doing that. I want to try to see if this sticks, and that's the low of the day. If that's the low of the day, and I give it up, but I don't have a great location on this. It's not like I'm long 75, 30, 40, right? So just treat it as a scalp. Yeah, just treat it as a scalp. Scalp it out or move to break even, but don't lose anything. Collect the 5 points, move on to the next idea. All right, I'm out. I took the 2 points on it. I took the 2 points on the trade. I closed it out. Just thinking out loud there for a moment. All right, so let's talk about absorption. Okay. Really, really important topic, right? Because so we frame out our areas, right? So we have our areas that we know, okay, this is where I want to be paying attention to price. This is where I want to lock in, and I want to this is when my decision apex, right? This is where I'm going to make my decisions. And absorption is simple, right? But it's very nuanced in that it takes it takes a good explanation and a lot of demonstration to learn it. And it was a concept that came to me over, gosh, I would have to say, over a few years, but I don't think it, there weren't, I didn't have anyone to explain it to me. So let me just get into that for a second. Let me just continue to frame this out correctly. Okay. Okay, so guys, so team here, absorption is, I don't know the worst commentary. Okay, so absorption is simple, but it's highly nuanced. Absorption occurs when we see aggressive action in one way or another, whether it's buying or selling, and they're hitting a certain level, but price isn't moving the way it should. Okay, so look, case in point, how did we arrive to this destination? Okay, let's frame it out. Let's use, oh no, this is, hang on, I'm on the wrong chart. Okay, so look, we understand that our level, this is for you, Greg and Adrian, right? Absorption, right? So we know value, yesterday's value area low is this level, right? Is this level here, 75.36. You can see it on the left on my chart right here, where the light gray turns to dark gray. That's value area low. So this is light gray is value area. This is outside of the value area, right? Dark gray. Okay. So we understand that area is our value area low, right? So we're looking at price come into value area. How did we get here? Well, price sold off pretty hard, right? But we understand the context of how we got, of why this happened, right? The overnight inventory was long. It looked above the overnight high. There were no buyers there. So then the inventory is being reset. We came down here fast and hard, selling really hard. Now remember, we always talk about when the ES is selling, what is it? It's a hot knife through butter. So if this was truly bearish and we were going to break down lower, right, on this move right here, we should have already been printing below it, right? So we have even, and maybe we're headed there now. How long? It's 10:15. Okay, so maybe we start printing here, right? But how we got here is what matters. So we were selling off fast and hard, came down into the low, and then what happened? Price started wicking higher. It started, and looking at the price, it's coming down, and then it's moving back up. Okay, so think about it like a sponge. Imagine pouring water into a sponge. The water keeps coming, the sponge keeps soaking it up. That's what a large participant can do. Buyers keep buying. They're sitting on the bid, right? Sellers keep selling. They're selling, and buyers are just absorbing. They're sponging it. It's like they're using a sponge to wipe up all the water. It's a water spout dripping on that sponge. It's just absorbing it all. Nothing's leaking through. Okay. And so the way you spot that at the area is, first, we want to look for wicks, right? We want to look for wicks, and we want to look for closes, right? Closes matter, because closes, using a time fractal where the 1 minute, 3 minute, 5 minute, right? That's going to tell us, okay, if we closed really low down here, right? But what happened on the next print? We opened right there and we failed to extend lower. We went right back up. Okay, so that's the first sign. Maybe we don't know that there's absorption there yet, but we're watching, right? So then price trails higher, comes back in. What happens on the next print? When we tested that area again, the next test, price wicked again. It went higher, moved all the way higher, came back up, it came down. What did we just do? We wicked again. All right. So even if you don't have a specialized dome or a specialized order flow component, you can read it on whatever. If I've traded from my phone and I can recognize absorption. In fact, last night when I got long, it was from my phone. I can tell you, gosh, I should have bought that again. Another tool that you can use. So Greg, Adrian, I'm not sure if you guys have access to the tick, right? I know Greg does. If you're on Thinkorswim, you have access to tick. Okay, so use the tick, right? Use the tick as a tool to help you. So what are you looking for in the tick? So you're looking for, there'll be buyer. So when the tick gets low, it usually signals a buy point, correct? Right. That's the kind that the thinking that's the way that tool is used. So if every time price is coming down into a zone and that tick is making a low with it, but it keeps bouncing back up, you're seeing buying reaction, right? You're seeing the tick absorbing. And if we're approaching a support zone and we're in low ticks, you know that the common thinking is that, okay, price is going to bounce here because we're in low ticks. So use that as a causality, right? If price does break below, then you know those sellers are real, right? Because we were in low ticks and they weren't even able to get to bounce it. Oh, snap. All right. You know what? The sellers here are aggressive. They just pushed it lower. We were in extreme low ticks and we're heading lower. And it doesn't matter that the tick bounced because we're still moving lower. Absorption usually happens at areas that matter. And this is why I always say location first. Do we have an area to trade? That's when we want to start paying attention. I care about absorption at resistance, at support, at value areas. I care about absorption at nodes, not in the middle of nowhere, because you'll become blinded to it. The market's response to those zones is what matters. And absorption takes time to recognize. This is the most important lesson about absorption, is that it's not a linear black or white, light on, light off moment. It's a read. So you're reading the order flow, and that story is constantly changing and evolving. And you have to change and evolve and read that information and go with that information. You have to go with it. Okay. So absorption itself isn't the trade. What happens next is the trade. So we kept bouncing in here. I scalped it once or twice, right? I should have bought it again. I just was distracted. Absorption itself isn't the trade. What happens next, right? So we're coming down into a price unable. Can sellers take control and push it down below? Can all those buyers that are absorbing those sellers, are the sellers able to take control, give them all they want to buy, and sell more to move price through that level to the point where now that sponge, where water's dripping on that sponge, well, now the water's leaking out of the other side because the sponge is full. It's like, all right, you know what? I've had it. I'm completely saturated. you break through, and then all of a sudden those buyers that were absorbing now throw in the towel, and you get like the sponge gets squeezed and all that water comes out. It's the same thing on, if buyers, it could be the same thing for buyers at highs. We saw that earlier in the week, where for an hour we were chopping and buyers were trying to push it higher. The sellers just like, buyers said buy, and sellers like sell, buy, sell, buy, sell, 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 sell. We're taking everything the buyers had. They just couldn't break through that level, right? And then ultimately the sellers were selling everything, and then they started going market offer, and then they pushed price lower, and all those buyers had to head for the exits. So those are the types of areas and reads that we want to trade as a part of, right? So I want to be long into that, and where those buyers are trying to win that battle, where they're trying to push that price lower. I want to be on the side of the market, on the absorption side. I want to try to trigger it. I want to try to get in with the guys who are going to be wrong. And in this case, what do we use to figure out? If we don't understand, it's impossible to know just by looking at a 5-minute chart who's going to win, right? That's a coin flip bet. But that's when we go to our higher time frame to see who's in control. We also use our day time frame references to say, hey, is this an area where somebody's going to show up and respond to? Does that make sense? Absorption equals effort without, it's like effort without results. You're selling, but you're not able to get anything for it. Someone is taking the other side of everything that's happening here, and the tick can reveal what's going to happen next. So look for absorption and important areas. Trade the response, not the absorption. Trade the absorption based off the higher time frame. All right, see, like we're getting that move higher. I wish I would have held that long, right? Coulda, woulda, shoulda. No need to do that. We want to have an abundance mindset. There's always another trade, right? Don't need to chase anything. I'll capture something. I know it's a long day. Still got 4.5 hours left to this one. Price is going to move. We know that. But I hope that gives you some insight on absorption. So if I had to frame it, do we have an area? What's happening at that area? And then we go to, if price at a support or at a resistance, is price being supported or resisted at that area? And then now let's look for a tactical entry, right? Let's look for, okay, well, they look like down here, they were absorbing at 75.39 to 75.43, right? They're absorbing down there, okay? So can I get on the next test, right? I'm watching it, I'm stalking it. On the next test, what am I looking for? I'm looking for, okay, if we get down 75.43, I'm looking, all right, I'm gonna get in now here. I don't know if it's gonna hold, you never know, right? But the earlier read kind of framed for you what side you want to be on. Live action. I saw a guy one day many years ago make 90K live trading only the tick indicator. Yeah. As part of my, I was having this kind of like this reflective moment yesterday, because in the afternoon I had a trade that went for 100 points yesterday, and I was having this moment where I was reflecting upon my own personal trading, my own results. Where's the growth for me? Where can I improve? How can yesterday we spoke about trading system optimization, right? How can I reduce my losers and increase my winners? And I kind of had this thought of, I have a yearly goal. I had a goal coming into this year, and I almost did a YouTube video on it. It was, I think, let me just see. It was the road to 250K. I think it was something like that. Let me just make sure I remember it. Okay. Yeah. So this was months ago. This was like back in January. I did in our private community in the pit. Many of you weren't around in January, but I did a trader talk on Manny's road to 200. It should be 250K. But I was framing out at the beginning of the year how I could make, because ES is endless, right? The amount of money that's flowing and passing right in front of us, it's literally like that guy that Live Action is talking about that made 90K. It's possible. It's just size, right? So if you're making 900, you can make 9,000. You can make 90,000. At that point, it just becomes a mental game, right? You have to be disciplined enough to build the account and get it there. And then you have to make sure that you have a solid process and that you're ready for the ups and downs. But it's really just about your mindset. And so I was having this reflective moment with myself, and I thought, and this may sound odd, but I was a bit disappointed that I wasn't. Again, I want to be clear that I am very grateful for the ES. I'm grateful for you guys. I'm grateful that that God has allowed me to trade in the way that I do and to support my family. But I thought, God, could I be a better Manny? Could I execute better? Why am I thinking 250 when I should be thinking 2.5? And am I shortchanging myself? Because literally the liquidity is there. So I was reflecting upon that. And then, so for me moving forward, I'm thinking, okay, all right, so what's the next step? If that's really a goal for me, does it matter? How do I get there? What are the steps? And is that an endeavor that I want to embark upon? One other thing to contend with is, so, I've been trading since 2000. I've been trading full time since 2012. That's when I started, but I was lost for those first couple of years, right? I was just completely lost. But I got profitable, nicely profitable in 2000, like back, I don't remember, it wasn't like one day to another, but it was like probably the back half of like 2014 into 2015. But by mid 2016, I was burned out. Like I remember one day I was, I looked at myself in the mirror, and it was like a Wednesday, and I had like a 3-day beard, and I was trading Globex, and I was doing really well. But I hadn't done anything but trade in like 10 or 15 days. I was like, in just t-shirt, flip-flops. I'm sitting at my desk, and yeah, I was doing well, but my life wasn't really healthy. It wasn't really good for me, from a mental perspective. There was no balance. And so I said, all right, I'm going to take it was a Wednesday. I said, I'm going to take off tomorrow. And if I was supposed to take off, I was supposed to take off Thursday. I couldn't take off Thursday. I was right back in front of the screen. Then I said, I'm going to take off Friday. And I couldn't take off Friday. And then that kind of crawled under my skin. I asked myself, why is it that you can't, take a day off? And so I took Monday off, and taking that Monday off led to over a year not trading. And it was probably one of the best things that's happened to me, because, I'd done all right enough so that I started another business. I got into it. I started developing real estate. And I kind of went down that path, and I met some great people, and I had a really fun time. I had a really great mentor who I learned a lot from about business and just different, just met a bunch of cool people, a bunch of quality people. And I spent 2 years developing real estate. No, more than that. I was developing, I sold my last I sold my last 8 townhomes in 20. Well, actually, I stopped being the primary developer in 2022, right after COVID. But if you set your mind to trading well and you adapt and you approach it systematically, and you have these goals, you set out those goals and you set out incremental steps on how to get to those goals, and then just knock one down each at a time. Yep. No, happy to. Thanks. I hope somebody gets something out of it, Philly. Sometimes I don't know how much to. Look, I'm pretty much a private person. Sometimes you don't know how much to share, but I'm. To the people that I know in life, I'm a very. I enjoy people. like some people are, don't, and I totally understand that because my brother's like that. My brother's my best friend, but I enjoy having, wide friends. And like in our house, like when me and my wife, before we had kids, all our friends would be at our house often. We always host a party, we always host people. And now my kids are kind of carrying that on in that they're, our house is like the house where all the kids are, the kids are running through my son's friends come in here without him and go into my refrigerator. And like, I was like, that's a bit much, but I enjoy people. I like, being around other people. And sometimes I don't know how much to share because I don't know what someone else's mindset is or what their personal story is. And I don't want to come off in the wrong way or seem, I'm a pretty humble guy. I like to say that, I'm a $20 guy living a $10 life. So you just don't know how much to put out there. I was trying to get some traction, so when we started this, trying to get some traction on social media, and one of the consultants said, hey, you should put on, what your results are. And I was tentative. I had dreams about doing that. And I put a portion out, but not, I don't want to really go into, because I don't know how that's going to affect someone, maybe like, oh, look at this guy bragging, or, it just, I think it's value add is helping people achieve their goals. Right. And so I don't really want to talk too much about that stuff. But I think it's also, another friend told me when you're on the stream, like, just be yourself, just be yourself. Treat every viewer like it's just a conversation you're having with someone who's in your office. And so that's what I'm trying to do. And with one of the traders I'm coaching, we broke down the goal to 200. He said, all right, he's a pretty successful guy. I said, you can make 250K in this. We'll just break down the goal, and let's make sure that we don't get overwhelmed. Right? Let's do a weekly goal, a monthly goal, a quarterly goal, and now it just becomes manageable. Right. And so we focus on one process at a time. Where are you bleeding? Where are you leaking? Let's shore that up. Right. Is it on preparation? Is it on execution? Where in the process do we need to attack first? And this is where a lot of traders, they'll watch a video and they'll see the results from someone not knowing what the work was to get into that point. Right. And so they'll see the result and they want to move straight to mastery. And I get it. That's why you started. But understand that if you don't build out the process, like very few things, how many people win the lotto and they'll return back to where they were before the win? I don't think the universe rewards non-effort. So most traders come in with a goal that I'm going to make $1,000, I'm going to make $5,000 or whatever. But you don't control that. What you can control is following your plan, taking your A+ setups, controlling yourself and your approach, and then watching what happens and tweaking that, honoring your stops, avoiding over trading, and then process. Your profits are the outcome, but your process is a choice, and that's the one thing that you can fix. That's the one thing you can work on. Track your rule violations, track your number of trades, track your improvements in patience, track your execution quality, right? Was my read correct? And then how did I execute that read? That's some of the things I'm going through now. You can have a red day and have a great process, and that's fine. And you'll feel good about that. And you'll be moving closer to your goal. You can win the day and lose the month, or you can lose the day and win the year. The goal isn't the goal. The goal isn't like 250K or 350K or 2.5. The goal is becoming the trader that's capable of producing that on a repetitive basis. Like, do you embody that personality, that character type, that archetype that can produce those results? And then see what the math does. Because then you start just looking at it as digital numbers on the screen. The money is the byproduct. The trader is the asset. Too many people focus on the destination. I try to focus on becoming the person capable of reaching that destination. Do I have the mental fortitude? Do I have the mental wit? Do I have the self-control, the discipline? And if I don't have them, where do I get them? Like just show me the way, right? Because I want that goal so bad. I'll knock down any door, I'll run through any wall, because I want that goal. And then break it down to little pieces, and then we'll get after it. All right, so just while we were chatting here, I did buy that other dip into that area with just like what we were discussing, retest of that absorption zone right here. Let me just see, it's on 162. So I've got 3 long at 48. I caught them. I've got one from 45, and then I added on the way up. So let me just get my scales out here. I'm coming into a trouble zone, so I know I want to start scaling into these highs. Bruce, thanks for your insight. Oh man, hope you get something out of it. Thanks for the support, Bruce. Appreciate it. Adrian, that was great. Thank you, Manny. Cool. Hope you get something out of it. Gaining a ton of knowledge. Philly D, nice. Share the food. Let's go. Let's all eat. Execution is huge, Philly. I mean, it's everything, right? And then when you really get into it, it's about what your mindset is during that execution. There are times, right, where I'm executing, I'm waiting for a fill or something. Every bit of my focus has to be on not doing anything, like a lot of focus, because the mind will start becoming overactive, and if you can't, it will start making you feel anxious, and that anxiety is hard to fight off. I believe that's where a lot of mistakes happen. They can't fight off that anxiety, and they just click the button, not knowing, and then after the result, like, oh, why did I do that? It's because that anxiety got to you, and you're human. It happens to all of us. But if that's what's happening to you, let's identify it. Let's say, all right, let's just be open and front about it. Okay, this is what's happening. All right, so I got the fill there, plus 13 on the first contract, moving a little bit higher. Yeah, so let's identify where you're leaking, right? And then let's just work on that, because we can break it down. We just have a systematic approach. All right, so right now, my preparation entails this. All right, now this is how here's the thing, like everybody thinks it's the levels, like, oh, this guy's got levels. If it was levels, everybody would be rich. Everybody can have levels, not everybody can trade them. You see that constantly, like, oh, levels. Okay, great, but can you trade them? Can you execute? How do you trade them? I've asked people, all right, so what are you looking at? Like, what's your breakdown? Like, once you got that level, what's your breakdown? Oh, and they'll get lost. Are you putting a limit? Limit buy it. I'm like, all right. So how's that working out for you? So because that's where the rubber meets the road, right? So you have the level. We had this value area low level. How are we going to execute it? It's dynamic, right? We're reading the price action. We're making split second decisions. We're trying to, if you're working on your execution, right, then you want to start learning more about absorption, right? Okay, so how did I read absorption on that move? And where's the next move that I can practice that read? And then start writing it down, right? Like out of 10 reads that I thought I saw absorption, how many times was I right? How many times was I wrong? And then what notes do I have on what the outcome was? And then we start recognizing, okay, I thought it was absorption, but I didn't wait for the bar to close. Or I thought it was absorption, but I didn't have an area. All right, so let's knock those off the list and let's move to the next thing. And then we just keep breaking it down. We just keep getting through it until absorption is not the thing we need to work on anymore. Then we start working on the next thing. And that I just took a more off at plus 8 points. Just because we're stalling out into this resistance. And remember what we talked about early in the pre-market? I mentioned that here. Let's look at back at the Thinkorswim chart. Remember that I mentioned that yesterday we had this big outside range day, right? This day right here. And I wouldn't be surprised if we had an inside day relative to that while the market sorts itself out. And thus far, it is 1042, and we've been completely inside the range. So let's just adjust our approach, being mindful of what the read is, what the context is telling us. Just want to get ahead of that and try to take some off where it's prudent. Let's go ahead and protect this. I'm so parched. Again, now let me shift to the plan, right? See where I'm at. Am I at an area where I can get into trouble? Should I just close this trade out, or should I look for an extent? Is there a reason why I should be looking higher, where I should expect a breakout? All right, so where are we at? We're trading 75.58. I think that's nope, it's not the continuation long level. We're above the resistance. Nope, 75.81. I don't have a level here. Okay, so I'm good on that front. I don't have any, I'm not running into a resistance point from my pre-planned work. All right. So now, well, what I do have is I have a daytime frame reference, right? Just this local high right here. We have not been able to bust through it. Is it worth it for me to hold this trade, or do I just want to take the exit and call it a day? And typically my style of trading is I want to try to trade as least as possible. So I'm always more inclined to hold the last contract. And you guys seen a ton of times where the last contract will just break even and there have been 7, 8, 9, 10 points in the trade. And that's just because that's my personal style. Like I want to try to hold the trade as much as possible, because one of my weaknesses was over trading, right? So the fix for me was becoming more of a position day trader. So I would get into a position and try to hold it as long as I can. And I remember I worked on that for a long time, you know, just not touching the last one. Just leave it alone. Don't touch it. Don't touch it. Don't touch it. I have to leave the office. And then sometimes I'd break it. Sometimes I'd touch it at the most inopportune time. Close the trade at plus 1 point, and then it never hit my stop, and then it ripped 30. But over time I learned that. And people ask me all the time, hey, why didn't you just close that trade? Just take what's there. It's just my personal approach, right? And that is an approach that works well for me. And back to trade optimization, right? So you'll never hit 100-point trade if you're thinking, if your mindset is not tuned a certain way. So if your mindset is that, every time you see a local high or low, or a daytime frame reference or resistance point, you're thinking to take profit there, then that's fine. Be good at that. because that works more often than what I do. But I want to try to hold the position for as long as possible, because when I look at the data, right? When I look at the data, it was about optimizing those trades, getting those bigger wins. When you look at my results, so then my average win goes up. I'm doing better in my maximum favorable excursion, MFE. It also makes my ratio of win to losers, or my winners 1.2 to my losers 1. That raises my ratio. So for me, my trading system's a little bit more. It's a little bit better optimized, and that's why I do it. But how often do I hit a 100-point trade? Not very often. That market's got to be offering it, and then you have to go into that day, right, with that kind of mindset already as part of, you've already have that built into you. I didn't figure that out on that day. I've had other trades like that. I think my highest intraday trade was, I think it was 100. I think it was 114 points intraday. I think that's the highest I've ever gotten. But it's not often that the market offers that much. And then you think about it, to catch a 114-point trade, the day's range had to be at least 130, 150. You're not going to catch the low and the high. That doesn't happen. Greg Will says, great explanation. Thank you. Did you mention you worked at Bloomberg? Yeah, I did, Greg. Yep. I worked at Bloomberg for just about 10 years. That's where I gained my exposure to markets, and that's where I was exposed to real institutional traders like Lehman Brothers. So back then, it was Lehman Brothers, Bear Stearns, Merrill Lynch, Credit Suisse, UBS, Morgan Stanley, obviously JP Morgan, HSBC, all these big banks. Bloomberg is selling like thousands of terminals. We would have 6,000 terminals at one JP Morgan office, and each one of those terminals was costing them $1,000 a month. So just imagine the amount of money that was going through, like that Bloomberg was making. Oh, you were? I was there back in 88 to 01. No way. Long before anyone knew who we were. Wow, that is. So wait, 1988 to 2001? Oh, that's amazing. Hey, Greg. So we'll chat soon. I started. I remember, because Y2K there was a big deal. So I started right before. I started in 99. Yeah, remember Y2K was like a huge deal. That we had people staying in overnight to watch the sacrificed their New Year's Eve to be at the office. The sales team, S-Desk was there, support, network ops. They were all on staff that night because they thought there was going to be this big Y2K event that never materialized. I was there for that. That's very interesting. I think I have an old Bloomberg picture around here. Yeah, it all worked out fine. Yep. I think I have an old picture of me at Bloomberg. I'm sure I can find it. Pay attention to the price action though. Wait, what did we just hit? All right, we're moving higher. Low. What time is it? It's 10:50. Coming into that time. I'm coming into my window here. Right. What does the profile look like? Right. What does the profile look like? Yeah, it's gonna be like, I'm more inclined to almost exit this because we're I'm not expecting like a huge range break. Hey, welcome Terry. Nice to meet you. Welcome to the stream. Let us know where you're checking in from. And Terry, if you're just joining us, I'm Manny, Pitbull Traders. We're tracking the ES right now. We were kind of every morning before the market opens, we outline a few scenarios. Typically, we're going through about 4 to 5 scenarios of what the day might look like, and one of those scenarios is playing out. We were looking for price to either for the most bullish scenario, we wanted price to break above the overnight high and continue higher. Or we were open to the idea that price would look above the overnight high, if it look above 75.68, and if it came back in, we were going to trade it short down to the downside with our first target, first destination on the trade being 75.36. And then for a bearish scenario, we were looking at if price got below value area low 75.36, we were going to scalp it short with a target of the overnight low. That never materialized. We started getting long into that absorption at the top of the into 10 o'clock. So we've been trading it long since then because we saw some absorption into that 75.35 to 75.40 band that we had discussed in the pre-market. Not expecting I'm in the long right now at 75.49. I'm not expecting too much on it. We'll just see how it turns out. We see we got stopped here at 75.70, which is that low volume node. You were on the sales side? Okay, so were you part of the sales team? Sales team was huge. All right, I looked away. Should have been out of this already. I'm just focused in on these on the order flow right now. I might just have to kill this. I didn't get the best. Exit on this. $49, $59. $74 was my mental target, and that might happen probably not until later today. And so let's see. I'll take a dynamic on the loss of momentum. All right, you see, we're in that topping formation, right? So here's what I'm going to do. I'm going to try to just optimize the exit. I don't think we're going to get like we're going to start breaking out. I don't think that it's. I think it's a long shot that we. Let me just draw it out so you guys can get an understanding of how I want to handle this. So I don't think that we're going to like go like this and like that. I mean, we could, but I just don't think so. So actually, I need to take it down right now. So I just took 14 points on that. 14 points, I'm out because we're starting to do this topping pattern, right? So I want to try to exit it like on a small spike higher, right? And so I'm really locked in on this like this tiny range here, right? So we had this range low, right? 70. What is that bar tell? What is that bar low? Again, I could be wrong, and it could break higher, but I took 14 points. So that bar's low was 75.60. So I was focused on 75.60 to 75.68. And that I wanted to get. Ideally, I don't think we're going to break out and continue higher just yet. I think we'll probably chop around a little bit. So using that 60 to 68, I want to exit, towards the top half of that. I think I got out at 65, 64, not sure. Hey, Michael, Manny, how do you know where to start counting from on your cycle days? Is there an anchor day that sets the cycle days in motion? No, so that's the thing. There's not a cycle. There's not an anchor day. You have to follow this count over the course of it's always a continuous count that goes on and on. And I've been tracking it for 15 years. So look, this is where I track it. Right. It's just in here somewhere. So I've been tracking this. This spreadsheet is from 2023. I started this one in 2022. Before that, the one that I had before that was from 2000. When I came back after 2016, I had one from 2018 to 2022, which I still have on a different file. And then I had one that was tracking. Like I've had 3 files that I've been tracking for like each one is like 3 or 4 or 5 years long. This one is this one's going on 4 or 5 years now. Let me see. When did I start this one? Yeah, 2023. So we're doing a workshop on the clock tomorrow. Of course, look, it's going to break out right now. Doing a workshop on the clock tomorrow. If you guys are around, do me a favor, post in the chat or on YouTube if you guys are checking in. Oh, good to know you. Terry's checking in from the UK. Hey, nice. Let me know if you guys are going to be around for the on the clock. It's going to be at 11 a.m. Good. Okay, Delphine. Let me find out. Hang on. Hang tight. So heads up, it's remember we're forward to that. to 570 and then immediately came off. Hey, Michael, I'm not sure. Did I answer your question as best? I hope I got as best I could. Adrian asked, will it be recorded? Delphine's going to be around. Philly's going to be around. Bruce is going to be around. Nice. Market open. Live action. No, the market is closed. It's Juneteenth. Hey, Michael. Yes, Manny. Thank you. I'll be okay. Cool. Great. All right. I'm going to put out an X post on it right now. Let me just get the link. I'm hitting up Renee right now. See if I can get the link for it. Hang on a second. Just give me a second.
Hey, good morning, man.
Hey, there he is.
Oh, just getting chopped around this morning.
Oh, really? Yeah, it's been, it's been a tight range, man. Just chop tilt up.
Yeah, I was thinking we might get a little bit of a rally, but it doesn't act like it really knows what it wants to do. So I don't know.
Precisely. I think we are in alignment on that read. I think that so we're kind of breaking it down earlier, but in the morning session. And so when we were walking through what has happened from yesterday into today, you can kind of get this where every every logic chain that we followed wound up at like a dead end. Like, okay, we're out of value, we're into value, and now what? Well, it's got to do all of this to show us something, and it just didn't happen.
It feels just kind of like a big sort of expanding range trade, but NQ is strong again, and the tech was strong yesterday, even in spite of the sell-off. So I don't know. I thought we'd catch more of a bid just based on the crude oil trade. But it's a kind of a curious thing, like why crude is really acting so weak. I kind of thought maybe it was just going to be something related to the contract roll. And it's pretty curious how weak it's been here. So
yeah, so if you're just joining us right now, Manny from this Pitbull Traders, thanks for joining us. We've just been Bo is one of our traders. He comes on and helps us out, shares his insight. Bo trades in a specific system. It's a little bit what I like about what Bo does. It's a little bit more granular in that he trades a little bit tighter of a time frame. So a lot of you guys trading, the smaller time frames, stick around. You can really learn a lot from Bo, who executes that really well. What I wanted to share about is the EST. Yes, Terry Frost, it's EST, correct. If you're just joining us, like Terry is, so we're just walking through it, just to give you a quick update on what we're seeing, right? So coming into yesterday, we had the pretty big FOMC sell event, right? So price, the Fed came out, announced, started introducing language for rate hikes, right? Everyone kind of knew that writing was on the wall when you go to the store and you start buying eggs, right? Prices is just going higher. We knew that they weren't going to be able to keep them down there for long, right? It was all dog pony show. So we had the big sell into the close yesterday, and we're going to look at the profile chart just to give us an added bit of color. Actually, we'll keep it on the minute chart just so in case people don't have the profile chart. But so in the overnight session, in the last hour, we sold and we closed near the low. Okay, and then And on the open of Globex session, price rallied. And what we were highlighting was that when price sold off that deeply into the last hour, there was a departure from value, right? The market closed out of balance. The market loves to trade with imbalance. So what we saw in the overnight session was our value area low was 75.36. The ES closed about 40 points below that. It settled at 74.92. Oftentimes when the market closes out of balance, we're going to see a return to that balance. And in the overnight session, price returned to that balance area. And then once it was firmly in the balance area, the most of the move happened in the first 2 hours from 6 to 8 p.m. yesterday. And we can see that here on the chart, right? With most of the move, and that's when I exited my trade at about 8:30, 9 o'clock. I thought, all right, that's it. We're back in the value. We're done. But look, this was 8 p.m. here, and then and this is our open. So it was all contained within value. And it was just an inventory correction. All right, so going into the open, were we bullish or were we bearish? Price was just in balance, right? There's not really much to be read there. And one of our scenarios, does price look over the overnight high and extend higher and start projecting higher value? Or does it return into value, or does it break below value and we continue the sell event? And the read there would be that the overnight inventory just corrected the closing imbalance. There's still more sellers active. They're going to drive prices lower. So in order for us to have that read, what we needed to see was a break below the value area low. We wanted to see strength and momentum into that move. Okay, so just off the open, we had a strong liquidation break. But with our early pre-market read, we knew we weren't going to get too excited about that sell event, because what happened in the overnight session was it corrected the imbalance from the close, but then that left a condition where the overnight inventory was 100% pop with 100% long. Again, the market was out of balance. So we saw that inventory correction just off the open, and then the market stopped right where, if it was going to sell and do more than just correct that imbalance, then we should have seen a move below the value area low of 75.36. That is currently where the market stopped, and we started chopping around there. A couple of us were buying that dip into that 75.36. I scalped it a few times and also caught a 5-10 and a 14-point move out of there, just looking to scalp within that range. And now that leaves us in a state where the market is really not giving us much, right? It's balancing. We're in the prior day's value area, but it doesn't look like there's much conviction yet to depart from value, right? So our developing value is completely contained within yesterday's value. Our read immediately switches to, hey, this might just be a balancing day. We have to change our trade approach with what the market is offering us. So in these types of conditions, what we start doing is we start thinking about fading the outside edges of the market, right? We start fading the outside edges of the range, start taking our scales really, really close to our, not looking for much, 3-5 points maybe max, and then getting out as we enter the center portion of that range, with the understanding that, hey, the market may not break out of it. At least tighten up those stops, move to break even. And if you want to see if the market breaks out, then so be it. You just manage the trade accordingly. You can trade this puppy any which way you like, as long as you manage the risk, right?
Yep. Managing the risk is hard to do when it gets choppy and you start getting confused. And you start thinking everything is going to be the move, right? And then.
Yep. It happened. No, listen. So there have been so many times, right? So here's the thing, right? Let's just let me share this with you, and I'd love to get your insights on it, though. So there are often times where a trade, at least for me, right? And I don't know if it's the same for you. I would assume so, because you're just a trader just like me. Where you know that a trade may take more than one try to nail it, right? Because and the reason for that is this, right? You get into the position, it trades against you. At that moment, it looks like it's not going to work. You close the trade, you're practicing good risk management. Then that condition changes, and the original thesis is now displaying itself. So with the understanding, yeah, I may have to try this twice. At what point, okay, is it 2 times? Is it 3 times? Is it as many times as it takes? What are your thoughts on that?
I mean, for me, the problem is if I keep trying, then I just blow an account, or so I think 2 or 3 is kind of at the limit for me, or what it should be my limit. Because it's more like, how do I control, the fact that I get too emotional and start revenge trading and all that, so that's probably the hardest part for me, is if I'm really stubborn with it, then that's kind of just happened today. Like, just started out trading fine, and then didn't get my follow through that I wanted, and then started shopping around, and then there goes my account.
Well, yeah. Fortunately, we're in the prop firm era, right? And if you guys are looking for funding, please go visit pitbulltraders.com, sign up for our program. Not only do we offer you funding, but we also offer you education. Well, that's the thing, right? And that's one that I find with myself, that there's a fine line between that split second moment. Like, so here's a good example. I'd love to get your thoughts on this, Bill. So yesterday, right, I had an idea that, so I had this level, right? I'm going to just highlight it on the chart. So I had on the market blueprint, we had a 75, 70. Let's see, it was 75. It was around 75, 75, right? I'm certain about that. Let me just make sure. Let's see. Yeah, it was 75, 73 to 75, 75. Okay, so that's right in this area, right? 75, 73. All right, let's frame this out. Let's just do a trade review, and let's just do a post trade, a post op. So price after the FOMC, like, I waited for the volatility to settle down, right? And then price came into, right, I knew I had the 75, 75 area, which was up here, and I was looking at this little low. Oftentimes price will come, test that low, and then sell off, right? So it did that, and I thought, okay, well, I have 75, 75 just above it, right? So that was a resistance where we had just sold off pretty heavily here, and then price came back and tested this high right to the tick, right? So I had the level, and I had the context read, and I also was in a window where I could expect a high pivot. On this wick, I sold it, right? And I think I was in at 75. I think I had 75, 67 and 63, right? So I sold it on the way down. I didn't get the best fill. Mind you that this candle high was 75.69. So if I'm in at 75.63, like, I have to put my stop on the other side of that. And no sooner that I got in did price. So you can see than 5-point loss. Probably 5 or 6 points. I know I didn't let it get to the other side of 60. We traded 575.84, and now we're stalling. And we started printing this red bar, and I saw it. I was like, do I try it? Am I selling into a rip? Like at this point, it looks like it's just going to rip to new highs, right? And so I pulled the trigger and I got short, but it was uncomfortable. It wasn't the easiest thing because that's an area where I want to get better at, is in being, I just walk away from being able to walk away from it and being okay with it. And then so being able to walk away from it and being okay with it if it works. I think one of the biggest misconceptions that the market doesn't the market doesn't do exactly what you expect when you expect it. You know, a stopped out trade doesn't really automatically invalidate the thesis.
No, it doesn't.
It just
so much algo, madness that, and oftentimes the best trades give you a couple chances to get into them. I mean, especially just reversal trades. Oftentimes, you get your V bottom trades, but oftentimes the reversals, it takes time for that inventory to actually just shift around and play out, before you get the true reversal on it. And that's where I tend to get early on a lot of my reversal trades, and then I'll make some money on it, and then I'll get stopped out, like moving my stop or going to break even, when really that was like actually the spot where I should have gotten into the trade. If I had waited a little longer, it was sort of the retest and the more obvious spot where, hey, this is now where the people are stuck and and glad to get out. It happens to me all the time. And it is very frustrating when that happens. Let's see if NQ can still hold the open here or not. Pretty doggish, I think, that NQ actually got back up through its open, but the ES couldn't even retest its open. If things are shifting a little bit rotationally, and if the majority of the S&P starts to worry about the rate hikes, they may not go along with the NQ so much anymore for a while. You could see a little, we've talked about it with the crude trade, when things decouple in terms of trading in correlation, when the correlation is good and then all of a sudden things start to feel like they're no longer correlated so much, then it's just sort of, it's time to be careful a little bit. Like the market could be telling us, like maybe the selling yesterday was the more legitimate pattern flow in terms of, it was an interesting meeting and press conference, because I mean, they could have just gone ahead and hiked you know, for as many times as he said, we're committed to the price stability. The fact that they didn't hike, I mean, maybe they were looking at crude and saying, well, maybe we don't have to quite yet because crude has been so weak. But that's why I'm like, my ears are really, my antenna is really raised here, because it's like, either this is our huge buying opportunity and spread opportunity again to be long crude and short the ES, or crude is telling us something and the bond markets are telling us something, and it's possible that the consumer has already started changing their behavior too much, and there's not as much demand as everyone thinks there is. And so maybe we've already started to make that shift and we won't know it until after the fact. But it's very curious. It's very curious how badly the crude longs were stuck on this move. I mean, it's very curious. Now, commodities, they always tend to overshoot. So I believe, we're really overshooting this. It is tested. It has tested and moved below its 200-day moving average. And considering what's happening with the world and the war and all this supply shock stuff, it doesn't make any sense to me. So we'll have to wait and see what it all means. But maybe I can get a fill here. I'm short a couple.
Okay.
And I'm bidding the low end of the range. 40 3/4 is my bid.
Nice. Let me know if you hit that target. I want to use my new fun tool, my new fun toy. Brings me joy during the day. Hey, real quick, team. Hey, so that cover up there at 75.65. I don't know if you guys were watching, but okay, so good exit, right? Well, the better exit would have been if I covered it for 20 points and didn't take like 14. I did have 20 in it. So it's 49 to 69 would have been 20. But what I took 14. But what would have been even better, right? Because for the same reason that I got out, I should have gotten short here. I got out here. That would have been super focused, super locked in, because the read was, hey, let's exit because we're going to rotate back into millennial balance. I was giving Terry from the UK that same explanation, right? That we were kind of expecting, changing our approach, trading from the outside edges to in. This was the exit. I should have sold them here and been getting out now into this, like with Bo. So, always want to be reviewing that so that this way next time I remember what that looks like, and more importantly, how to execute it, with the understanding that, maybe I don't execute it perfectly on the first time, but if the idea and the thesis worked out upon review, then I just work on the execution the next time I see it.
Some nice selling pressure in SpaceX today. Back down to 177. So that could be a little problematic too if it keeps dropping, Either it could be problematic or it could be good for some rotational inflow again, right? Like if we sold off so that they could make money to buy SpaceX and participate in the IPO and all that, then maybe they were able to take some profits in it early and rotate back in to some other stuff. It just, these days, like, to me, it just seems like the selling pressure just still just doesn't follow through enough. Like there's like a sell day like we had yesterday, there was still this like big portion of the tech space that was up. And you know, it just, if we're really going to go into a hiking cycle, and you're really going to see like selling pressure, like a big reversal, right? Like not just sort of garden variety. You know, you need to see some of this stuff where you have a day like yesterday and it's like everything sells off. We didn't get it, and we just continue to not get it. It's like there's always rotation going on in these markets. It's tough, very tough. I'm gonna try selling another one here, short 58.
So babe, Bo, you just said something interesting. You said if we really do go into a rate cutting environment or hiking environment, right? And then I missed the point. Sorry, I got distracted. Could you just, if you don't mind, just go over that one more time for me?
Yeah.
What are your thoughts on it?
Mostly what I was looking at yesterday, which I shared in my room and on Twitter, was the CL contract, ES, YM, and RTY all fulfilled its their full ATR movements, the 5-day ATR range action. They all fulfilled them except NQ. NQ could only go about halfway of its range yesterday, even with the sell-off. And I thought that was very interesting. And when I looked at it, it was because most of the tech companies, you know, the Micron, the Broadcom, I can't remember, you know, but basically that space was green on the day, even though everything else on the big board was red. And so what I'm saying is when you really start to see selling pressure and like a reversal into something like a bear market price action, what I want to see is a day like yesterday, but have the whole board look red, you know, 500, you know, maybe you get a couple stocks that are green, right? But the entire S&P 500 red and blood on the streets kind of day. And, you know, we made the new all-time high and then we reverse on volume and put in like one of these big sort of quote unquote like key reversal kind of days. And so that's what I'm looking for in order to sort of start really hammering this on the short side. Because as you know, I like trading short because I learned how to trade in 08. So I just have an affinity to the very quick action, steep drops that you get in a selling market. I like trading it, you know, and so I get into trouble if I'm too aggressive on the short side in these bull markets, obviously. Like, you can't do it, you know. But that's what I'm looking for, and we haven't gotten there yet. We'll see like what next week brings. I think Warsh kind of, like you heard it from some of the talking heads, I think he really did kind of thread the needle for his first meeting. And my question will be, you know, do we see any kind of snapback in crude quickly like I think we should right here, right now. It's now made a little bottom pattern. It's recapturing its 200-day moving average right here at 73.5 or so. And, you know, you could see crude pop $10 in a couple days because it's got a $5.5 5-day ATR. So like, you know, a reversal back into the 85-90 handle, if it happens quickly, you know, the short squeeze can happen and be just as vicious as the sell-off that we've seen. So, you know, the Fed's going to have to watch that stuff pretty closely. Meeting being 6 weeks away is a little bit, yeah, he's maybe need. Also, what if he isn't? What if 6 weeks from now oil is back 100? There's so many cross currents, and you know, how does the money flow, and how to, you know, it's just really hard to read, I think.
Yeah, I mean, higher rates create uncertainty, right? We all know that the market does not like uncertainty. Yeah. But uncertainty, at least for us, right, for daytime frame trade, is we enjoy, maybe, because that means a high VIX, that means movements, that means bigger ranges, that means, and movement for us creates opportunity, right? We don't really most days, but also, you know, trends become less reliable. Cheap money tends to create, you know, persistent trends, but higher rates often create like more rotation, more repricing, larger ranges, failed breakouts, two-way trades. So, you know, I think from a daytime frame perspective, it might be even better for us daytime frame traders. I mean, almost, you know, you get better rotation, but you also get, like, you know, bull markets create like these easy like trades, like where you just like buying dips and it's fairly reliable. You kind of get lulled to sleep.
Right.
But you know, generally more range, more opportunity, more setups. I don't necessarily need a bull market like through that. Yeah. You know, the down markets are great, man. You know, like, you know, down markets are fantastic. Because even me as more at the better long side trader, I think I've had, you know, you can have some really great long trades in downtrends, but also like if you can capture, you know, the short trades, you know, and of course I have recency bias, right? It's because we've been in this bull market since, gosh, man, since, I mean, the last serious down market was what? I mean, COVID. So it's kind of like, you know, I have recency bias in that I'm, you know, always looking for a long, you know, long bias, but short trades, like you get paid so much faster on them.
Yeah.
And you know,
yeah.
You know what I mean? Like, I know why you like them so much, dude, because when you're right, it goes. It's like, oh my God, it's like peak euphoria. It's awesome. I get it, you know, it's pretty cool.
And I mean, the important thing to remember on that kind of stuff is that the reason it goes like that is because someone's selling at the market, right?
Right.
They're sweeping the book. They're taking that liquidity. So a lot of the guys, you're one of them, and a lot of the people in the room are really good at also taking the counter side of that, you know, in knowing it that we're actually still in a bull market. It's like, okay, that's your setup. You wait for the sweep, then you wait and see a little tail, or however you you identify that as your opportunity, then you come in, because as soon as that liquidity sweep has completed, then there's that air pocket back to the upside. And so those are just, remember that when you see, for instance, a big volume print, and you're looking at your volume chart and it says, say, 10,000 contracts traded on that 1 minute candle, well, just remember that basically it was a 10, there were 5,000 buyers on that candle as well, right? Like, it's both sides of it.
Right.
But so when I'm short, I like having, for sure, I like having orders in the market, looking for that market order to come and sweep and hit my, it's like, it's nice to have a runner. Right here, I'm just trying to pass an eval because I blew my other one this morning. So
Yeah, like
so I got my bid. I moved my bid up to 44 because I'm just trying to get to the $1,500 level right now on this one. And I might just hit the bid on. I've got 2 contracts on currently. It seems like we should go down to the bottom part of this range, and we've got the pivot down at like 32.5. And now that the NQ has dropped back below its open, that could be just what we needed to see this thing now probe back down to the downside. And whether or not the YM can hold 52,000, you've got a really good pattern forming in crude this morning. Now that it's sort of made this low at 72.80, it's up a buck off of that, and I believe you're going to see. Okay, I was just filled at 44. So
nice, good job, Bo. Way to go. Let me get you good.
Thanks. I mean, I needed that after how I traded earlier, but
yeah, I just took an evaluation trade. I haven't traded an evaluation in gosh, because we were just sidebarring about it. I haven't taken an evaluation trade in like 2 weeks because, like, I don't know. And I have I have some of them that are just like, some of them are a little bit net, a little, like, some of them I have 150K that's like needs like $2,000. I have one that's like down $2,000. I have a couple of 50K that need like a couple $100. And I just like, I have a bandwidth meter that, like, certain point of the day, I just, like, I don't want to trade anymore. I don't want to manage it. And
yeah.
So usually when I get my daily, what I'm trying to earn on the day, like for groceries and stuff,
right.
I just tap out and then I forget to trade them. And then I start, typically, like for the last 2 weeks, I've just been working with people in the afternoon, in the early morning, in the afternoon session. And then I just forget to trade them. But and then another thing you guys can do, you can do this on our site. One of the ways we designed our Pitbull Traders is that you can pass evals and just kind of keep them locked, stocked, and loaded for when you want to activate them. And so I have a couple, I think I have like 5 like 50Ks that can be activated. And so there's really no reason. I just have some there that I always try to like to keep like David likes to call it a bullpen.
Yeah.
Of counts that are like either in the funded stage or about to be funded, so that. But I have one 50K account. It's the same. It's the same account. I've been trading it since. I think this is, if I'm right, I'll check just to be sure about it, because now I'm really interested in it. But this account, it dates back to February.
Nice.
Let me just see something. I'm just gonna check it now because the last time I checked it, I was like, oh wow, look at this. This one is this one's stuck around for a little while. Let's see. Interested in knowing what this account. When did I start this one?
Hey, I'm gonna jump out for a bathroom break. Just
yeah, sure. So, yep, go ahead. I'm gonna give the folks the rundown when you get back. Yeah, just to finish off that statement, I'll wait for Bo to come back. Oh, I didn't yep. So I'm just like scalping this account here. I have to run. Back with you Monday. Have a great thanks Terry. Thanks for joining us. Hey, do me a favor. Follow on X at Manny_trends. And there is where I post all the times and all the live workshops that we're doing, as well as some interesting stuff that's going on in our orbit. Thanks for stopping by today. Hopefully we added some value to your trading. If we did, just do us a favor, hit that like button. Appreciate the time you stopped by. Appreciate the time. Thanks for stopping by. Oh, this one's for Greg. Hey, Greg, I just dug it up. This is an old Bloomberg picture. And I had to don the monkey suit every day. It's for Greg. I'll chat with you on the side, Greg, about I think our times overlap by 2 years or so. But I Bloomberg is a great company. Fantastic. Nothing bad to say about them. I had a fantastic career there. It was good for me from beginning to end. Interesting enough, as they came to my school to recruit, and they called back 26 people from that day. Out of that 26 people that they brought back for an open house, 6 got called for interviews, and I'm the only one that got the job. And I had to go on 8 interviews for that job. Like, it was just interview after interview. I was like, do you want me or not? But glad I stuck with it. Really glad I stuck with it, because it was my exposure to markets. It was what taught me pretty much my entry into markets. Yeah, so I checked that account. I've been trading that account since February 20th. Just real quick, guys, so one of the things that we're going to start changing a little bit of our structure here is we're going to start having, we're going to try to start bringing more of we have so many talented traders in our orbit that are either trading in a different chat room, or pretty much, trading in a different chat room, and they have so much to offer. So we're going to try to bring them on more frequently. Of course, with time permitting that they can come on, right? Everybody's got to manage their own trades and kind of attend to that, but we're going to try to get more traders to come in here and share their unique approach and their unique insight. So we're going to start having a more overlapped schedule into next week, where one trader will just lead into the next trader. So with that said, I'm going to be stepping away here soon, and then Bo will just carry you guys into the afternoon session. And yesterday, we had Danny at noon, which was fantastic. I had a meeting, but I couldn't listen to most of it. But Danny's great. Like, I love what Danny brings to the table, because and especially at the time, like that midday time frame where you can just like chill and reset and kind of just work on that matter in between your ears. It kind of helps out there. I tried to scalp it long, both. So good for you that you're getting paid on that one. I threw in the towel on it. It's a boredom trade, with no rhyme or reason, and it wasn't in a. I kind of get a little. I need to respect those evals a little bit more.
I know that's a tricky part about these things, is that psychologically you can get to feeling like that you're trading an eval, so you don't care, and
right.
I do that sometimes, and then other times, like this morning, it was me flipping around and being like, okay, now they're going the other way. Like, I was long and kind of had it pegged, got out, was trying to fight it, going around every little movement. Then I was long again up there, I think around 66. And because the NQ is going through its open, I thought, oh, easily this is going to pay, And then when it didn't, that's when I reversed around 63. And it's like, I still could have got it at a much better price than where I reversed, right? If I had just not been so emotional about it. The thought process was fine, in that I was kind of processing and saying, look, the ES should go on up to the open and get through the open here if it's going to follow the NQ. The fact that it didn't was there was a good reason for me to reverse. It's just, you don't have to do it this split second, take your time, analyze where you might want to get out, where the proper entry might be, and then put your orders in. This thing that I do where I lose, it's like going on tilt kind of, and as long as you don't really truly like blow out an account, like that's what's great about the risk parameters, where you can, with an eval or with a pro account, I mean, you're limited to what that account is, right? So that's why so many people are doing this with prop firms now, because instead of having 10 grand or 100 grand or whatever you put in your account, and you go on tilt and have a huge blow up day and literally blow your account. I mean, that's how we had to used to do it in the past, is you put your own money in, and then when you blow an account, you blew your account. I mean, and it felt like crap. And it feels a lot worse for a lot longer than the winners do. That's for sure. The winners, you just sort of expect that, oh, I can do this every trade and every day. When you have a big blowout with a real account, I tell you what, you will lose sleep for weeks.
Yeah. Oh yeah, for sure. I mean, there are these times, right, where I know that, like, I'm just not seeing it well. Can't hit the side of a barn. And the hardest thing, and I don't know if you feel the same way, but the hardest thing for me on that day is to leave it alone, step away, just recognize that, hey, it's not my day, right? But the times that I have like dug deep and pulled away, those have been like when I've done it and I've stepped away, and whether I've come back in a few hours, like I don't mean step away for 10 minutes. I mean, it happens at 10 and I'll come back at 2, which is for me is okay. One of the things that one of the when I it's hard for me to execute that, but when I do, I feel really, really good about myself. Like the loss, the events that led me to leave almost dissipates, and I feel good because I won that battle by stepping away. And I try to tell myself, like, step away, dude. You'll feel better, and it's hard. It's hard because because you're still like thinking about the move. You're still thinking about the trade. Your mind still has like this momentum, and it's hard to counteract that. I've had to like play these tricks with myself, like turn away from my screen and not look at the screen and just look down at the floor and walk out.
Yeah.
Like just like extreme tactics, man. Like just weird stuff, man. Just it's trippy. Oh, all right.
Okay, there we go.
Those as I get closer to wrapping up, I just wanted to comment on what you said. Those prop accounts, you can almost look at them like I was talking to a trading buddy and he analogized them to like a call option, right? Where you say you buy a call for $100, that all I can lose is $100, right? But I might have unlimited upside, like the February account, right? It was a 50K account. I know I've gotten that account to like 75K multiple times, and then taking distributions along the way. But that $100 account, whatever it was, I don't think I paid $100 for it. That's a call option that paid really nicely. Nice. But there are other ones that I've had accounts that I've only placed 2 trades in and I blew. Because like it just like, okay, so I took a 5-point, think about it, on a $50,000 account. If you have $2,000 drawdown and you're trading 3 contracts and you lose 5 points, that's 2 trades. You're 3 trades, you're done. If you got 3 stop outs, and that can happen. That's, in fact, it's not rare. It's not unlikely that you will have 3 stop outs in a row.
Yeah. Or you can be like me and you can just load up and quickly have the trade stop you out. lose your account in a few seconds.
You're being too hard on yourself, man. But I get it. It's always fun.
Oh, man. So actually, like, one of the things I did this last time was when I got to my performance account, I started trading with you'll just laugh at this, right? But I started trading with a 2-point trailing stop on the ES.
Oh man, how long did that last?
And actually, I mean, you're still, what it caused me to do was it caused me to be very, very precise with my entries. And the idea behind it was, I'm just trying to buy a matching low or sell a matching high, like to the tick, or maybe like within one tick of whatever that high or low was that I identified as. If this holds, this could be a good trade. And then because it's a trailing stop, it's like, if it ticks your way at all, your $100 loss becomes a $50 loss, becomes a break-even trade really quickly. But if it trades hard against you, you're out at $100 loss, and you just saved a whole bunch of dough. And by using a one lot, I just slowly was able to build up that account so that I could get into the buffer and get paid out on it.
That's interesting.
But it was really tricky for me to try to switch up my tactic on that. And what it's causing me to do, I've never been very good at adding to my winning trades. I've tried it here and there over the years, and I've tried it like in a systematic way. And I get frustrated by the fact that if I'm trying it like in a systematic way, it's like I'm not doing it per the charts, and so then you add to it and you get stopped out because of the noise, and really, like, you should have just waited and added at a different spot or this sort of thing. So I don't know, it's a little bit of I'm still kind of fighting my demons and fighting myself in terms of, can I follow my plan or not? Does it work with these prop accounts? Like, I seem to do better with a bigger prop account because I have a $4,500 loss margin, right? So for me, I like to put some size on. $2,000 isn't enough. I feel like I need a bigger buffer there.
So interesting enough, Phil, when I started trading props, I only do 150s, and I mix them up now. I try to keep like certain ones are 50, certain ones are 150. The 150 are, so I try to stagger the payouts, right? So I'm always getting something, and then keep different accounts in different cycles. But you might want to switch to a 150, and I'll tell you why. That's how I learned how to trade props, and it wasn't until like just about 8 months ago I started using 50s, and I needed that extra buffer. The 50 is tight. It's a different trade. It's a different risk management, and I cut my teeth trading the 150. I think that extra, whether it that extra $15 or $2,000, it matters. It makes a difference, and it certainly made a difference to me. But really quickly, guys, before I jump off, I just want to review some of the things we covered today. The market closed on the lows yesterday. We returned to value overnight. We reviewed that. The important question wasn't whether we rallied. It was whether the market could build acceptance and a departure from value, and acceptance in that departure where it was higher, whether it was higher or lower. We also talked about absorption. Remember, absorption is effort without results, right? When buyers are aggressive, but price can't move, whether that's higher or lower, someone is taking the other side of that trade, and they are the more passive aggressive participant. We also discussed the market profile and how volume nodes, low volume nodes, high volume nodes attract and reject. The profile isn't showing us like support and resistance as much as it's giving us an idea where the market found value and where it didn't. So what, and that manages, that kind of frames our expectations and what we can expect. We covered order flow. The process is simple. Do I have an area? What is order flow telling me at that area? Is price responding? Is it rejecting? Does it confirm my thesis? Where am I wrong if I enter? We talked about our goals and in the difference between chasing a dollar amount versus being the trader capable of producing whatever outcome we whatever goal we build out for ourselves. And And I think we also discussed some volatility and why tougher markets environments often, create more opportunity, based on the Fed reaction. But final thought: remember, the market doesn't care about our opinions. It cares about acceptance, rejection. We want to read that story, read that print, and go with it. Just try to be one, get into that flow state with what the market wants to do. Stay focused on your process, protect your mental capital, react, don't predict, right? Just try to react. I'm going to hand off to Bo. Today, we're also setting something different. We've been discussing behind the scenes quite a bit. More overlap between our presenters, so that we can kind of keep that steady flow of presenters coming through. More overlap also creates more of a conversation going forward. So look out for next week. We're going to have Tom will hopefully be back. Tom is dealing with a family issue. We wish him well because it's a tough one. But we're expecting Tom to come back. I also lining up Rich. I would like to start beginning and ending the week with Rich's stats, because those statistics matter and they can help us frame the week ahead, and also the week that we're going into, as well as look at what we might be facing in the following week. So instead of starting, ending and starting over, there's just going to be a continuous overlap, and we're going to keep things rolling on. So Bo is here. He's going to carry you guys out for the afternoon session. He's going to continue the discussion. Make sure you take your questions and ask him, share your trades, and dive into what's happening in this market. Keep the conversation open, because that's how we learn. We only learn through, it's very easy to get fixated on your charts and not not communicate what that mental river of thoughts can be. It can turn into a rapid. And it's good to stretch and to talk to a buddy, talk to a friend, chat in the chat room, engage, make sure that you get out of, in a respectful way, get out of your own head. I'm going to leave you guys with Bo right now. Make sure you show him some love in the chat. Do me a favor, if you're sticking around with us on socials, be active. Leave a like for Bo. Share your questions. So Bo, I'm going to leave you with the team right now. You have a great afternoon, and I'll see you later. Thanks, Live Action. Take care, guys. I'll see y'all later. Bo, is your chart up?
I'll pull it up here in a second. Yep.
Okay, cool. Yeah, that's gonna matter. Thanks, Live Action. Thanks, Delphine. Have a good one, guys. Trade them well today, okay?
Thanks, Manny. You too, buddy.
Take care. Thanks, Stuart. Have a good one, buddy.
All righty. Get this going here. Okay, so question will be, right? We've been pretty choppy all morning. Do we actually see some development of some trending price action into the afternoon? Or has everyone already started their weekend, Father's Day, long weekend vacation, what is it? US Open weekend, all this kind of stuff? I would expect that we go into summer trade mode and nothing really happens here, right? So, but if we do start looking like we're going to trend, then that's reasonable as well, because we've had choppy action in the morning. Sometimes you can finally get, again, position squaring, a little bit of rebalancing going into the weekend. You can have some good trends that develop late in the day. So that's kind of what I'm going to be watching. Sort of going over my charts, what I was trying to show people yesterday, And then this morning, what I was talking about. So this is the NQ chart. This is our current, the yellow box is the 5-day ATR range. What I like to do is I like to center that range on the closing price, the Globex session, but then I can use this box to quickly visualize where price could go if we fulfill that full range on the day, right? So we're close to possibly breaking out of our RTH high here. If I drag this up, I can quickly see if the low of the day was in on the overnight print and we fulfill our ATR, we could trade right back to this all-time high. Okay, so what I was looking at yesterday, I had this positioned like this. The numbers would have been slightly different, right? But when we started selling off here, I did this exercise where I moved the box down, and this is what I was talking about, is the NQ couldn't even fulfill that range to the downside on a day when there was obviously pretty big selling in you know, a lot of the other spaces, right? So so to me, that kind of showed a sign that, like, hey, maybe the market's absorbing this just fine. If we do the same thing here with the ES chart, okay, this was, it didn't change that much in terms of our ATRs, right? Like, let me double check it, but yeah, the ATR is within a couple dollars of what it was previously, so about 140 points. So yesterday, I had it initially positioned like this. And again, when we started getting some selling, I just dragged the box down, I put it on the overnight high, and then look at where that thing came to perfectly on the sell-off before it bounced, okay? And the reason I bring it up a lot, is because the algos like math, and they, you know, sometimes you get ATR expansions, sometimes you have ATR contractions, but oftentimes when you get into a pretty normal type of trading cycle, these ATR moves will not only fulfill but reverse, and it's a great, you know, it's just a great exhaustion point, or another great exhaustion point that you can use in your charts to realize, like, hey, when you get down to this level, you don't necessarily want to be pressing a short down here. If you missed the short, you know, then you miss it. Step aside. You don't want to be like pressing that short thinking we're going to close this gap. I mean, that could be your theory on that trade, but if it starts going the other way, you better get out quick, because, you know, it's already gone. It's already had a 100-point drop, or whatever it was, 120 points. So anyway, that was one reason this morning that I came in and thought, hey, maybe the NQ is still going to show strength today. And if that's the case, then maybe we will continue to follow in the ES. And the fact that the ES really couldn't even get a retest of the open here, I don't like that price action, you know. So, but now when we're looking at it, it's not like we've really done anything. It's just like what Manny was showing. We got back into the value area, and now we're just going sideways and going to sleep. And this could be, you know, just a summer session starting the 3-day weekend. But if you start rotating around to the other charts, it was similar thing yesterday in crude. When we made this low, so here's how I initially had it set up. And we made this low, and then when we had the new spike, that one wasn't perfect, right? But look at how close it came to fulfilling that ATR. So today, similar kind of thing. If I start it centered here, but in my mind, if I'm thinking crude is way too low and I'm looking for a bottom to form, which this is a pretty good looking bottom to me right now, right? The 50-day moving average came in at, 200-day moving average came in at 73.54. And we had an S1 level at 73 and a monthly S2 level at 72.80. And guys, look at the low of this move. 72.83 was the low. So, it's like when levels work, they often can work with very extreme precision. And sometimes that's what I'm finding is, like Dad used to say a lot, like the scariest trades are often the best trades, because, it just, when things look so bad, that's, on both sides, when it gets way overdone and stuff like that, and you're really afraid to take the trade, it's sometimes worth taking the trade just to force yourself and see, right? But if crude put in this low here and it fulfills its ATR, it could easily trade back to 78. We could come in with news over the weekend, and another ATR move is $5.50 or so. 5-day ATR is $5.50. We could be right back up into this gap fill scenario very quickly. And that's what I'm saying is it's had such a big move lower. I would not, even though my setup still says to be short only, it's been short only now for quite a long time. At some point you have to say, look, the risk reward is no longer there. It does not make any sense to me to be short crude at this time. And frankly, again, I am shocked that we don't see an even bigger rally. It's pretty good. Like, we got a print above 3,000 in the RTY. We got another all-time high in the YM. So those are good things here. So, because Warsh said we're not, they're not hiking until possibly next meeting, probably not. If crude stays low, then they probably won't have to. But it gives the market 6 weeks to sort of just relax a little and say, okay, we don't need to be in panic mode here. And this could just be still another like back and fill moment where we continue to go to all-time highs, where we continue to put in like a similar concept, which I was talking to Rich a couple weeks ago. It was either early June or late May, and Rich was explaining to me his standard deviations, and he was sharing his sort of calculation of what the expectation of range movement might be for the ES in the month of June. And if I'm remembering right, he said he expected about 380 points of range from high to low. So, some of those kinds of things you can take into your scenarios. And like, if you take the ES now and put it on like a say a 4-hour chart. And here's, possibly our June low at 72.32. I mean, we've already fulfilled that price range. So do things get tired here? Maybe, maybe we've established a big range for some summer month trading, and then you have to start questioning whether or not you need to change your approach slightly, because the same trading approach and the same trading style doesn't always work the same for all markets, right? If you get into a range bound market, you just don't get the follow through, and you get chopped around a lot more. It doesn't mean you can't make money and that you can't find really good trades. And so, like, just kind of talking about that somewhat. Here's our 60. Here's our 30. And then I like to trade mostly off the 1 minute and the 15 minute as my kind of bigger time frame. Okay, but so for me, I use the opening print as my first kind of filter. Like, if we're below the open, then I should be sort of leaning towards the short side. And then I use my moving averages. So if the moving average is flat like this, then that indicates exactly what the candles are also showing us, that we've got this range trade, right? The filter of the open sort of, for me, goes like this. Like, now if we get back up to this high at 71, or even better yet, what I would love to see is a retest of the open and then short that on a first touch retest. And yeah, it might just go straight through. But if the big boys have more stock to sell, oftentimes if they're below the open for a while and they get the chance to sell more stock at the opening print, then that's usually a very good fade. And when I range trade, one of the things I like to do with my runners is, if you got a fill up here like that, and then it does start collapsing back down into the range, the old idea was to basically say, cover one at the midpoint of the range and cover the other one, so half and half at the low point of the range. But like what I was discussing earlier, when you have a morning that's just chop, you could still get a choppy range bound trade with some resolution to the downside in the afternoon session, and a close on the low with a red bar in place. And what I would look for on that is a measured move. So from 75.80 to 36, 45 points, maybe if you can't quite get all the way back to the open, that's even the kind of top of the range could be right in here somewhere. And then if you get your 45 point move, it can come right back down to like the 7,500 figure. And that would be sort of a projection of what could happen in the afternoon and going into the weekend. And if you're long biased, then you just can look at it sort of similarly, but in the other direction. And then, cross-referencing any kind of levels on your sheets. So we still have our pivot at 32. That's what I was saying before, is if that does not hold, then they could flush it right back down towards the Globex open, prior close. this 5-day moving average at 75.10, 13-day. These numbers all for me on my sheets, they get a little wonky because of the contract roll. So it takes some time for some of this stuff to smooth out. But that's kind of the way I look at some of this stuff here. Let's see. So do you guys, do some of you guys actually have Pitbull accounts, like prop accounts, or do you use other firms, or what do you, or are you guys all trading kind of your own personal accounts, or? Okay, yeah. I think the hardest part for me with those prop accounts is just figuring out the different rules and figuring out how I can adapt my personal trading style to those rules. Because yeah, in my personal account, I really tend to, I don't mind being down a lot if I'm not trading like an idiot. You know, it doesn't bother me to have losing trades if I'm trading per my plan. And so even if I'm down a lot in a day because I've taken, say, 2 or 3 big size positions and they've just haven't worked, I kind of like the idea of still trading throughout that day, because oftentimes I get it back, you know. But it's when I start doing the stupid shit, the tilting and all that kind of emotional behavior, that's when you really want to shut it down and go do something else and save yourself a ton of dough. Let's see if I can pull up. Here's my Delta Trader platform. So we've got another little RTH high in the NQ right here. This is NQ and then ES with a 1 minute here and then 15 minutes here. So, you know, it's like if ES is really going to follow, then this could be, we had a nice little indication of upside move, a nice little pullback here. You could be trying to buy this pullback at the 62, 63 level. And then, you know, you'd want your stop down below like 59s, something like that. So let's see, maybe I'd do something. I don't know what I got here. Let's try this. There's a good pullback to this moving average. It's a little fuzzy, right? Because it's not really, the support should have been precisely here at the 64 level. And so the fact that it comes down into that, it's somewhat of just indicative of how range bound pricing and range trades can go. You know, it's like, oh, as soon as it fails, then everyone thinks it's the false breakout and it's range bound. So now we're going to go back down to the bottom of this range. And that could very well be the case. You do have NVIDIA on the highs. You've got green across the board in the tech world. You've got what you should see is some tailwind out of crude. So it's like, this should be a pretty good buying opportunity here if this is going to close on our highs. So let's see what happens if I put one in at 62. With a 4-point stop. My target would probably be a test of the open or a stop run through the open. So you're talking about 4-point stop for a trade that could go, 20 to 30 handles, if not more. But at least, doing a quick risk reward there on that kind of scenario, you can just do that quick in your head and be like, yeah, that's reasonable. You want to see NQ make a new high now and ES to just rip and follow it. And when it doesn't, this is what I'm talking about, is these things, when they start to sort of decouple or decorrelate, right? You see that the algos know now that all these stops are down here. So the question is, will it just completely reverse and cut through all of these stops? Or does it give us one more little chance and maybe do a little false breakdown of this bar? So the low of this bar was 60 3/4. So this is what I'm talking about on precision, on a precision buy or sell of a retest. If you think that level is going to hold, you could try one right at that level, or just maybe a tick above it. So 61. And if it goes through, you don't want to see it go through more than like 2 or 3 ticks, because you want it to either hold that level precisely, or if it goes through by 2 or 3 ticks, you then want to see it reverse hard, because it's a false breakdown of that level. And so that's where, if you're trying to use a pro account or performance account in the prop firm space, that's what I was doing when I was playing with a 2-point stop on the ES. It sounds ridiculous, right? Because you just will always get stopped out by the noise. But sometimes you get one, it immediately fires your way like 10 points. And then, yeah, it might come right back and stop you out at 8 points, but you made a $400 profit on a really quick, small risk amount. Just easy, quick scalping kind of stuff that you can do if you're using, this is a one sends other order. So as soon as if this gets filled, then it immediately puts my stop in. Like, you guys know about that kind of stuff, right? You know about strategy orders, and that's something that people would want me to go through. I can show that in my Rhythmic platform. Niels hasn't quite gotten to full strategy orders on this platform yet. It takes a while to build out some of these things, but yeah, I can do that. Let me just close this out. So Delta Trader is built on top of the Rhythmic platform, essentially, so I can trade in either one. And then, like, like I'll release this window and show you. I'll just do this in the micros. Micro, the U contract. Okay, so let me just put this right here. So in your order book here, you can go in here and where it's a bracket order, you can configure this with different styles and show more options. And so like, for instance, this is one where I've got a 3-lot, 10-point manual stop. So 3 is the quantity on my stop amount, and it will automatically put in my profit taking orders and my stop. It also has this where you can either select it to trail by the last price, or you can have it move. So like in this case, what I'm saying is if I have my first profit target is at 12 ticks. So if I get filled on my first profit target, the strategy will automatically take my other 2 units and move the stop for me to break even. And then from there, I manually adjust my stop if it continues to move in my direction. But if a second unit gets filled on my profit target, it automatically adjusts my stop on my quantity. And then you can do other stuff like this, like on your targets, convert to market at, so I can have this convert to market at the close or near the close or whatever. And if I want, I can put a trade on and leave it in place and just go do something else for the day if I trust it. You know, I mean, you probably don't want to do that too much, but it's also like a good way of getting away from the screen, away from the computer, and not watching every tick. So like here's what we're saying about, you know, this retest of the 60 3/4 level. So far it's held, but it hasn't done a whole lot. So maybe instead we think, because we're range bound, maybe instead it will break that level and come back down through, right? So at 60.5, I could put in a sell stop order on 3. It will have my stop up here at 70.5. It will have a first target at 57.5, second target at 54.5, and then my third target way down here. And when I use a stop entry like this, what I want to see is I want to see this thing trigger actual selling. So I want to see it fill me and immediately sweep some liquidity and fill the first one. And if I get the first one back, then I basically have a break-even trade. And what happens is I can configure, say I have these different strategies. So I can configure it with the 4-point trailing stop. I can configure it with this 1-lot 2-point trailing stop. You know, however you want to do it, you can kind of configure it, and it's really cool the way it just, it takes the speed element and puts it in your favor instead of worrying about, oh, I have to move my stop, and what if I go to move my stop and I'm not fast enough and this and that. It just does it so instantly for you. So let's just see what happens here. I mean, Nvidia's on its high. Amazon's pretty close to its high. Meta, Microsoft look kind of bid now. who knows what happens with this, but and then you do want to be careful, because as long as you have this button enabled, if you go to put in another order, it will be a strategy order, so it'll put all those same things in. But you can also just click that, and so it's disabled. And now if you wanted to try to sell another one, there's your short sell order at 868.5, and you can double click it to cancel, or you can drag it. You can easily drag these like this, and it drags all the orders. So it's also, if you decide, oh, well, I want to widen out my profit targets, I think maybe it'll retest the 56.5. So maybe if I want to try and go +4 and +8, 56.5 and 52.5, you could do it like that. Now we're getting this upside move here. So that was a good purchase. It turned out, as that retest of that 60 3/4, you were selling them +3 and +6, and then you see if you can get one that goes straight up through the open. And if you'd rather, you can certainly try, now that it's indicating that it wants to go, you could certainly try a really quick pullback, like to the 65 1/4 level, right? So if I cancel that, I could also do a 1 lot with a 2-point trailing stop, try it at 65 1/4. I know everyone laughs at that, right? Like, it's like, how can you not get stopped out? Well, because if they're holding this thing up firm, maybe you just go in here and, oops, I gotta hit the default. Maybe you just go in here and take the offer, buy the market basically, and see if it immediately goes bid. But that's kind of a chase. So, how much do you want to chase and then have a really wide stop? Like, if you're chasing because the price is showing that it feels firm, you want this thing you want to be in and immediately have it go. Which, look at that. I mean, I couldn't even get a little 3-tick kind of pullback where I put that order in. Now, if it pulls back to 65 1/4, it really should be, because now anyone about this here, because there's a lot of room to run. If the NQ takes out its all-time highs today and closes on its highs, I mean, it sounds sort of ridiculous, but again, like, we should really be getting a tailwind off these lower crude prices. And that especially goes for tech and all the utilities and energy consumption that they need for that. So sometimes it's like, when you have a chaser like that, okay, I didn't get the chaser. Well, okay, maybe I really do like this. Let's try it. A 3 lot with a 4-point trailing stop. And we're getting this pullback right to this spot, 66 3/4. So let's try it at 67. The concept is, if this was resistance and it becomes support, we don't want to see price coming back into this range at all. It should just barely trade back to that. What was resistance now becomes support, should just barely trade back to that, and then just blast higher. I don't really expect that to happen. It's probably just stop me out. But if we can get a fill, you'll see how these strategy orders just are kind of cool because the stop trails, the this and that, you don't have to worry about anything. And sometimes I use my own sort of ideas to help me determine like how much is this thing firmly bid right here. I can't even get a, you know, I've got to totally chase this thing to get a fill. Close my door. I'll be right back. Hi, honey.
Hi. Barking?
A little bit.
Oh, sorry.
It's okay.
Trying to get you a break.
I'm just on the presentation.
Okay.
All right, looks like we're gonna get a fill here. See how firm this feels now all of a sudden. Where did the sellers go? Well, they might be about to sell right through me, right? But also, if sometimes it's like, hey, if you're not getting a fill and you want to try it on a buy stop, you could do the same bracket and strategy order on your buy stop right there. That way, if you don't get filled down here, you get in on the trade here, your concept is still the same, but it's, you know, here you're trying to buy it on a little bit of a discount. Here you're trying to buy it on a breakout. I might still get it here at the 67s. If I get it at 67, I'll cancel it up here. Nice, I like that live auction. All right, so I got that filled at 67. I'll just cancel that. So there's my strategy order in action here. You can see it ticked a little bit my way, and so that trailing stop moved up a few ticks. So it was originally a $60 risk. And just by having it go a little bit my direction, what I'm saying is I don't want it to turn and go the other way, right? So as soon as it starts going my way, you know, if it immediately turns and goes back the other way, then they could just sweep the downside liquidity. But this is what's kind of cool about this is you just sit here and it doesn't matter, right? I mean, usually if I change my mind on these trades, that's when I get emotional and stuff. And right when I flip it and go short, it's like, oh no, that was the right entry, and now here it goes, you know. I don't tend to like trading the micros quite as much because I do feel like the algos kind of sweep the noise even more so than with the minis. But in this case, I'm not really wanting to give back a whole lot on my morning here. So in order to stay active, if you want to keep trading, you can do that. Flip to micros or just stay small in the ES, trade a one lot or whatever. Looks like they might sweep the downside, but if this is a little false breakdown and then you see NQ start to shoot higher, then those are sometimes the really good trend trades that, you know, they just take advantage of those little sell stops right there, and then they start squeezing them. So that's what I want to see, is that quick sort of outside bullish engulfing bar form on the NQ. And if that happens with NQ, then the way ES normally has been following it, ES should follow, you know, very quickly. And so again, like anytime it behaves in a way that sort of doesn't seem right, or it starts to, that correlation starts to become somewhat disrupted, or doesn't feel like it's trading the same as it used to, then we should also pay attention to those scenarios, because we could be seeing a shift in the market. Even if NQ kind of, you know, kind of makes a new all-time high here, it doesn't mean it can't reverse, close on its lows, you know, on volume. Those kinds of things happen, and it's like that's what we're all watching for, to really see if there's a big shift. So yeah, CL looks good, right? Like it should target the open, it should go back above its open and really sweep back through the 75s, 76s. You know, it could do that going into the close, you know, the NYMEX close, it could do that easily. And reminder on the crude contract, I mean, it's really not that thick. It used to trade a lot thicker back in the day, and now it's really become a much thinner instrument. And so the moves are wild. All right, so look, now we have this pivot low is 65 3/4, and I've got my stop at 64 3/4 now. And it's like, sure, that should get stopped, right? Like they're totally going to sweep that stop, right? But if it doesn't, that, you know, those are the things, is sometimes you can identify and trade with a really tight stop, because you're identifying that low should not break. And if it does break, you could see it go right back down here to the 56s. Okay, so I'm flat. Thanks, buddy. And now anyone who's like me, I mean, this is the beauty of that supply-demand dynamic, is anybody who is like me that was thinking, oh, for sure we've got a winner here on the long side. Now they're like, uh-oh, this thing broke. It could be about to sweep. And, you know, the lower it sort of ticks, the more they're hoping that they're going to get a bounce back up to that entry level. So if you were flat this whole time and watching and waiting, and your bias is to be short, then this is a pretty good indicator, because as long as price can take out a little bit of this level, the moving average should roll over like this, and you start to see more of a downtrend develop. And what I was talking about earlier, if you're trading in a range bound market and you have a short bias, then you try to sell the high of that range, and you look for the cover either at the halfway point, or you cover one at the halfway, you cover a second at the bottom of the range, and then it could actually sweep and turn into a downside trend from there. So I'm going to do that. I'll just keep trying a couple of these. I'll see if I can get a bounce back to this level at 65 3/4. I'll just make it precise, right? Support should now be resistance. We got our move back up to the open on the crude oil contract. So a beautiful rejection and double bottom with, when you get a double bottom where it makes a lower low, that's sometimes an even better formation than when it makes a higher low, because sometimes that has a lot more people trapped because it actually did make a lower low, instead of if it had only traded down to here. That's what most of us like to see, right? Is a higher low and then it goes. But occasionally you do get this kind of candle with the tail like that, and it really can be explosive. So again, I would not want to be short crude. I would not want to be pressing my short on crude. And now right here, see, if I'm long right here, I'm getting a little nervous about if they take out this 50, 60 level, right? So I like being short from 65 3/4. I also like being short 60. And I like being short 54. Or here's the VWAP 53 1/4, so call it 53. Oops. Let's put it in as a 3 lot. If we get this NQ rejecting, NQ flushes back down through the open, so where all the long traders have their stops on NQ, it's back at the open. So that's either a good target, or it's, you can sometimes buy just the sweep of the stops. So if you can get a big candle through there, sometimes they'll reject that, and it's a really good entry. Like, if you do like layering into positions, like it's not always 100% wrong to add to a loser if that's part of your plan, right? So like when you're talking about the opening price and the opening price principle, as I sort of have borrowed it from, it's an old trading book that exists out there. I forget who the authors were, but it was like a dual author. But you can try like layering into a 3 lot, at just above the open. If you were buying the NQ, for instance, just above the open, at the open, and just below the open. And the concept being that you should get a rejection of it and have it move higher. I know some people do that anyway with their zones, and they treat things more as like buy zones or sell zones. And I just find the more precise I am about something, the more confidence I have with it. So, all right, I got short there, and if it immediately goes against me, then I might be trapped. Okay, but what I want to see is that level is meaningful to some sellers and that they sweep back through these 54s. But since it's already 5-6 ticks against me, I wouldn't be surprised at all if they just reverse this and now absolutely rip it to the upside, because if this is all the selling we can get in NQ right now and it can't even come back down to test the open again, then, NQ could be ripe and ready to go straight up back through and make new all-time highs. Because oil has started to rally, I don't really think that's what's in the cards. So what I want to do is I still want to sell these if we get this rally back up to 65 3/4. And if we can't get back there, then I'll know why, because we'll be going lower and I'll be getting paid on this position that I put on. But with the way NQ's acting, I'm probably on the wrong side of this again. Look at YM is pretty close to its lows and eyeing lows. And I'll be kind of watching to see what happens with the advanced declines. Yeah, 1% move is so much more in terms of the overall points than it used to be. That's why it is dangerous adding to a losing position, because there's just so much more noise than there used to be. And so if you don't have a real good idea of your uncle point in terms of the loss or the level itself, and you get sucked into just adding to your loser, and then eventually when you cover, well, that's where everyone's covering, and so that ends up being the top or bottom. We've got a little reversal bar possibly here. It just formed in the NVIDIA 15-minute chart. So watch NVIDIA. If it trades back down through the 209 level, then we could see the NQ drop fast and hard. Yeah, I mean, the rig count it's at historic lows. And this is part of the problem with, or the disconnect that I see right now is like, these things don't just come back online as quickly as people think. And part of it is just the labor involved, the labor pool. Like, not everyone is just sitting around the oil patch waiting to get their jobs back when oil is real low, and there's not a lot of drilling going on, so like once some of that labor moves away and out of the space and into other fields, then you can have a big shoot up in the price of crude, and everyone thinks, oh, everyone wants to drill again, and this should be easy to just turn the spigots back on and all that kind of stuff. But it's not necessarily that easy, because the rigs aren't just, let's see if I should move this up higher. I really like this. When you get a reversal setup like this, I really like it, because it shouldn't really go back through that 71 level, so if I had waited, it would have been a lot better, right? But now it's like it can easily go to the upside. Oops, hold on a second. Yeah, you're getting some upside confirmation in the YM and advanced declines. Meta, Microsoft, all of these names. So I'm probably about to get smoked, but I'll try one more right here at the high and see what happens. Looking for the false breakout, obviously, but that was my mistake, right? Because this was more of a false breakdown. I was calling it out. false breakdown. But that doesn't mean it won't still trade back down into there. See, I don't know if I should be doing this here. So what we've seen sometimes in the past with the rotational stuff is that sometimes when they're buying YM and RTY, they'll sell the Qs and the SPY, right? That doesn't feel like today, but that is a sort of inverse relationship that we've seen. And you could see that play out where now the NQ starts to sweep. We have that divergence in NVIDIA where I don't know. What do you think, guys? Let's see, 212, yeah. That could be the low window. Again, I do want to just see if this will, if it trades back to 69, I should probably have an idea, right, if it holds or not. Now you have a little potential 1, 2, 3 formation with the lower high there, right? Feeling gnarly, like it's not acting like a false breakout. But I'm still watching NVIDIA closely here. Advanced declines acted a little bit like a false breakout. So watch advanced declines as well to see if they immediately trade back down through their range. So if they go back down through 800 and then kind of tick through like 750, 700 and just start to, you know, really show some weakness there. Amazon making a new high. Nvidia sagging. Could still hold right here. This is the support level needs to be at 209.87 or whatever that high was. Yep, 209.87. So they could easily hold the 210 level on Nvidia and just push this thing through. Yep, I agree, live auction. That's usually what happens. You get the squeezes on Friday afternoons. We still have plenty of time, so this could really squeeze me hard and just keep going and going. And this is really a nice, actually looks like a nice trending signal right here. Okay, Nvidia's testing this level. It's at 209.93. See if they trigger any selling. Yeah, it's a pretty good amount of heat for me to be taking on this trade without having a stop in and all the rest. So I'm just violating rules here. So I'm going to try a few more at the open. Advanced declines are still eyeing highs here. All right, I've got some size on, so it's a little awkward. Let's see what happens. Well, sorry, I'm not trading better, everyone. I want to see this thing fail and reject and start selling hard. Kind of feels like it's going to go the other way, but so far Nvidia held that level, so that could be a real good indication. Okay, SMH new highs, thank you for that. Okay, let's see if they can sweep some liquidity to the downside here. Anyone that was buying the open, thinking it was a breakout and that we would easily take out the highs of the day, those are the ones that would be sellers lower. So that if the algos kind of, if they see that imbalance form in real time, which I believe they have the ability to pay for that order flow and to see it, that's where these things can sometimes just become the big rejections. And I don't know that we'll get that, but I don't like the way this candle's forming in the YM. You know, maybe it'll still keep going, but I feel like I should have a decent chance at a pullback back to this 70 level still. And especially like watch Nvidia again, it's kind of sagging back down towards that 210 level. If it sweeps back down into that range where I was looking at it, that's kind of the thing I wonder about, right? Is where does that liquidity come back in? Oh, I'm gonna turn my mic off and on again here real quick. Manny says there's maybe a problem with it. All right, is that better, you guys? Sorry about that sound. Okay, cool. All right, so yeah, let's give this a little more time. See how NQ like could be ready to do a little bit of a liquidity sweep right here. And maybe not, you know, like this could be like I should maybe be covering more just to cut my loss because I was sort of trading like shit. So why don't I do that? I'll take another one off there. Let me take, yeah, I don't know. It could come right through some of this. We had a nice little sort of high tick there at like plus 400. Now it's back to 0. So if this becomes, you know, a false break out of the open, you would want to see the ticks now start to print negative, okay? And then you'd want to see this create a little miniature sort of head and shoulders, which it already is kind of doing, but the liquidity sweep now needs to follow. So I just should have been more patient. You know, that opening price principle can sometimes really be just a really great trade. And yeah, who knows what we do here, but if we go back down, you know, there's a lot of selling they can do right here that doesn't affect their price now, right? So they like sort of pump and dump style, like it doesn't cost them as much to just start hitting the bid and selling down through this stuff because they've got it back up to these levels. So you don't want to be, I personally think you don't want to be terribly married to your longs here after the selling that we saw yesterday with the Warsh comments, because, you know, that was pretty big heavy selling and they could have more selling to do. And so the fact that we're back up at these levels makes it easy for them to come in and turn on their sell programs again. And, you know, it's sort of like the old manipulation kind of stuff that you read about in like reminiscences of the stock operator, right? It's like when they've got big positions to unwind, they can do this stuff both ways. And we don't really know until after the fact where was the real supply and demand and stuff. It can happen quickly here, and I'll say this, so far I'm feeling kind of lucky, right, that it came back here the way it has, especially if the SMH is making new highs. But look at this rejection and the advanced decline. So it printed 880, dropped right back to 820. Let's see now if it can kind of get back down through the 750 level and maybe target a negative print on the close. And this is a beautiful looking head and shoulders formation on the 1 minute if it actually carries out the formation. So you don't want to see it violate the 75s. It should trade up here and then they should sweep it right back down. And you've got oil going through, it's open now. Let's see, YM trying to move lower. You're saying YM was at a previous low that was holding and you preempted a short. Yeah, so when YM printed this long green candle, what I was trying to gauge was, are we going to see some rotation where YM and RTY rally and then they sell off the others? And so that was just like a concept in my brain of like, oh, the rotation that can happen, this is somewhat what has been happening sometimes on these rotational trades. And so I'm often looking at so many charts all the time that I'm looking to see, is there something that kind of tips its hat in terms of, okay, this is happening and maybe they're rotating and doing something else over here, you know? And it doesn't necessarily mean anything. If it doesn't trade the way you expect it to, if you formulate some thought or opinion on something like that, then you want to respect the fact that it isn't trading the way you wanted it to, and be wary. Like, right now, what I want to see is this thing really undercut. And so that's the kind of price action right here that I want to see happen fast. Like on this 1 minute bar, I want to see them close, sweep down through here and close, below that. And if they can't, then it could just be that we're about to all go into rip mode. Because sometimes you can have the best rallies or the best sell-offs are when everything's going together and all at once. So it was a pretty good rejection again of the open, but unless it follows through back into this range, it's not a rejection. It could just be that they've trapped everybody short like me and they're going to squeeze us into the close. Amazon on its highs, Meta on its highs, Microsoft and Google look pretty well bid. Tesla is trying to recapture its open. We went from 400 upticks to minus 100, but now we are acting like we're going to go back to the upside again. Yeah, I better cover some here, that's how I'm feeling about it. I still don't see NVIDIA making a new high here. So if NVIDIA starts to sell off again, this trade still could be the right trade for me. Tough to figure this stuff out. There's not a lot of rhythms. It feels sketchy, and then it's like you cover and then it drops 10 points and you're like, why did I just cover? And so the 71s need to hold here if you're bullish. How many stops are below this level? So you've got stops in here, stops here, stops here, stops here. And it's just a matter of if they decide to turn those sell programs on, can they sweep them, They may not be able to with as strong as the tech is today. But because we were so range bound earlier, I kind of have to believe that there's enough trade on both sides of this thing that you've got also a big 15-minute doji candle formed here, you know, but there is very good support now at this level. So if that support doesn't hold, the whole range kind of opens up below you, or it can open up below you. It doesn't mean it will. I'll go ahead and take a few more off, I think. I don't know. It's probably fine to hold it for a second. I'm not going to wait around too much if it doesn't really follow through, right? It should really trigger some selling, and you should get a few points out of it pretty easily. But if this is like a false breakdown of that 15-minute doji, then they could just reverse and go straight back out to new all-time highs. I mean, really, even new all-time highs, you know, it's like, but we are seeing a little bit again in crude. So where do the rotations come in and at what levels? Does this become sort of the rejection of the open and like a continuation selling event after yesterday? We're seeing a dip now in Meta, Microsoft, Amazon. Let's see if NVIDIA can start selling off a little too. Doesn't look like it wants to, but sometimes I get out and then like 10 seconds later, it's like right where I had my bids, it was filling me. All right, now can it accelerate? Advanced declines are coming back to that 800 level, so let's see if they can target the bottom of this range. Should probably just cover it. It looks pretty firm still, the NQ, doesn't it? But if NVIDIA fails at this ledge here and gets back down in the range, then I think this will be still a pretty good trade. I could try trading around it, like you can try shorting some more at 72 3/4. Since I got started too early, I don't really need to do that. It's sort of like, yeah, I know live action. I mean, the thing I like now is the fact that on my system, this is the position that I should be in. The moving average is sloping down on the 1 minute. That's my primary system. We're below the open. And so I want to be usually trying to short the rallies up into that moving average. And then hopefully they sell these, because the price action is that they sell the lows. In a sell program, they sell the lows. They sell the lows. They sell the lows. In a buy program, it's opposite. So you want to be short and then buying into these. When I have this setup, this is the right setup. The stupid part was you don't need to, the way I was shorting it here, it was the same kind of setup, right? But the fact that it went all the way through that and I didn't get out, I mean, that was me just being stupid. And it didn't need to stop. It could have absolutely ripped straight through, and it still can. Like if this is all the down pressure that we get, this could just be, everyone who was short from even way down on these levels is waiting and trying to buy these things back. So I might just buy a few more back right here just because. But if we get this break in NVIDIA like I'm looking for, then it could trade into the 60 range, 62 to 60 area really quickly. Let's see if there's anything on the NQ level-wise that corresponds. Not much. You know, so it's but sometimes these sheets get wonky with the roll, like I was talking about. Nice. Good job, live auction. Nothing wrong with that. Did you get your fill? Sweet. NVIDIA testing the 210 level. Advanced declines back to sub 800. So now if advanced declines can sweep the 770 level and get some downside momentum, you know, can they go all the way back down to like 0 or negative on the day? Still feels pretty firm, doesn't it? I'll try one more here short from 71. Looks like NQ wants to go out to new highs, but it could be false. I'm not sure about this divergence yet with NVIDIA. NVIDIA could still hold and go raging up to 215 or something like that. Here's advanced declines trading 777. And here's what I'm talking about with, is this meaningful? So if the advanced declines start to accelerate to the downside, I should see a little more selling in the S&P. And if I don't, okay, then that tells me something maybe. So now, because now it's like a divergence thing with the Qs trying to go make a new high while the advanced declines were sagging there. So watch the NQ closely here, because if that was just a false breakout and it's now sweeps, then we've got more downside momentum, I think. Now let's see if they can take it. Here's NVIDIA, it's trying to break this little shelf. 209.86 just traded, so that's the turtle soup number if it follows through. I normally expect to see price test this moving average, so 63 and a half. Advanced declines are trying to hold a little bit here. Crude making a new high. Now I want to see this bar close, red. And then if it does, I don't really want to see it get back up into this little range right here. So technically speaking for me, because I use tight stops and stuff, I should probably have my stop in right here above this bar at 70. But because of what I'm seeing in NVIDIA and the advanced declines and stuff, I want to give this just maybe another few minutes. Yeah, you're welcome. Hopefully it helped. I mean, it wasn't my best example of breaking my rules and all that, but I hope it did help with some of the other stuff I was talking through. So have a great afternoon. Have a great weekend. And yeah, I think Danny is going to be, I'm not for sure. I can't remember what Manny said, but it seemed like Danny was maybe going to come in here at noon. So I'll hang out here for a little bit longer, see if she does come back in. And if she does, then I can skip out. But for now, I'll just stay in this and see if I can get a couple more of these back. Maybe I'll get actually paid on it. We're seeing a little bit more downticks here. It printed minus 160, but that's not, you want to see it kind of print back down into the minus 400, minus 500 level on the tick chart. So it might be worth just taking this off and calling it. But I do want to see if NVIDIA can bounce or not, because if they start selling it, this could get to the 63s pretty quickly. What else are we seeing here, you guys? RTY is still up above its open, kind of eyeing highs. So it feels a little, uh-oh, what just happened to me here? Lost my screen share. Feels a little stubborn of me to just not be getting out here. But remember what I was saying about range-bound price action, and sometimes it's hard to figure out what the range is, or is this big range going to still come into play here this afternoon? Like, if you look at the YM, it is coming into play. I mean, look at now this weakness in YM, and it just wants to sweep down through and take out the lows. Here's some pop in crude. Let's see if I can get 63 1/4 bid filled. That was a pretty good little wash with the -400 down ticks. The advanced declines dropped to 750, so if they can follow through some more, that could be the test of this moving average that they buy. But oftentimes when it's big range, or range in general, oftentimes when it gets to this midpoint or to this moving average again, that could also be the point where there's additional sellers coming in. Because now if they bottom up here, where do you have your stops? Like, it's hard to know, but that's kind of the dynamic of how range trades often work. And believe me, the algos and the big boys know that as well. So if their concept is range trade again today, then they're targeting down to here, which means they can have their sell programs on. They can press this sell up here. They can press it. They can just keep taking the liquidity if they want, if that's what they're set up to do. Every time someone's sort of buying it down in here, they put in a new level, a new group of sell stop orders to protect their longs, and the algos just feed. It's insane. All right, got the 63 1/4. Yeah. See if the acceleration comes in. Look at the YM. Okay, you can wonder if the YM. I mean, it doesn't look horrible. Like there's a lot of support here that you could buy it, thinking it's going to hold. But also, support is only support if the buyers step in. So if instead there's still a lot of anxiety here after yesterday and going into the weekend, and they start triggering sell stops down below these levels, then they're going to likely target a measured move from here to here is 400 points, right? So a measured move takes it down to 51.8, which is that low from yesterday. Now, that doesn't mean that automatically happens, but seen this stuff before. It could happen. Look at crude trading 75. So will crude go all the way up to the top of its ATR? Remember, I showed that above 76, 676 and a half, they could really start squeezing crude. It's like a total gift that it's down at this level. Maybe not, I don't know, but that's kind of my thought on it, was how in the world was it this low again when all this stuff has been happening? NQ is still holding up pretty well, but now you have NVIDIA dropping a little more. So 209.70. Can NVIDIA trigger some sell side here? If it can, then this should accelerate. And oftentimes when you see the longer moving average like this, if you can get a print down through it, then oftentimes this is a good short entry. Even though we've come down a lot, sometimes you get a really quick one touch, and then it dumps. So that's kind of what I'm looking for, but YM could hold just fine. The advanced declines are sort of trying to hold. Meta looks pretty weak and looks like it's taken some hits. Microsoft looks like it's taken some hits. I guess now that I'm kind of back to my break even, I should cover some more, or just put my stop in now, but sometimes I do that, and then it's, again, like I said, right when I should have been holding. But you are seeing a pretty good pop here in the advanced declines, back to 765. So that could have been my chance. Sometimes it holds this as well and creates a really good buying opportunity if this becomes another big uptrend kind of move. But since we traded so much range bound earlier this morning, that's what I was saying. I would expect more of the same, and with just a little bit more of a seller's bias after what we heard from the Fed. I mean, I think it's the market, what was the market originally expecting? 3 cuts this year, and instead now they're pricing in 2 hikes, 1 or 2 hikes. So that is a fairly significant difference in terms of where monetary policy expectations were and where they are now. There's still a lot of stops they can target right through these zones. I mean, and that could be the reason to be buying them here, because it's support. If the buyers come in, it's good support, and you had a nice tight stop to not get stopped out on. I should have taken it off down there, I think. All right, I don't think I want to give it much more room than that. I mean, that's pretty good patience to at least give it that much room. What I want to see now, if this is going to continue, is just that here's their chance to get out, and then they come in with another sell candle boom like that. But it doesn't feel like that's in the cards for today, with as strong as these tech names are. So crude, look at crude trying to take out the 75 level. Sometimes this is the really good long entry right here, the reversal. But if it's not, and if they sweep them, then they're going to be a little bit panicked to sell, because it's a big air pocket. So kind of watching Amazon start to roll over a little bit. Walmart and Costco have been weak the last couple days. And it's like, yeah, is that telling us something about the consumer? Is that why crude was so weak? Let's see if I can get 62.25. If I can, that probably means it's about to break. See, NQ is trying to break, but still just has to test this moving average. Now I got 62.25. See if I can get the 60.25. That was like my original, right? What do you guys think? You seeing a retest of the VWAP here at 54.75? Could happen. Could go right through it. Look at YM again, looking pretty gnarly. That could be a great place to try buying YM again. NQ at 685. Not seeing much there. Prior day's high is 584.5, and then we have prior month's high of 536. Crude, you've got prior day's open is 75.72, and then the pivot is 76.10. Oh, and you got a weekly S2 here at 75.40. See how that rejected that low. Now it's trying to recapture this moving average. But since the NQ hasn't quite gotten there, oh, it's 666. It's the NQ moving average, 666. Oh, the devils, the devils. The advanced declines recovered that level pretty well, so they're trading back up to 820. Let's see what happens. I think they're going to be a little pressed to keep the NQ up above its high of the day. I think it wants to trade back down to the open maybe. But if it can hold above the open, that's a really good sign, guys. Really good for next week. Guys and gals, whoever's out there. Looks like a lot of strong selling coming back into Meta again here in Microsoft. RTY eyeing highs. So I'll try to get out of this. I don't know. Getting hungry. Nvidia's starting to rally. Quiet. summertime trade. You can also do stuff like this with your wave counts. 1, 2, 3, 4, 5, 6, 7. Pretty exhaustive when you look at it from that perspective to the short side. But you can also just take your 15-minute candles. So this high is 66 3/4, and this high is 68. So it shouldn't, in theory, break the high of this candle. And what we want to see is in the next 3 minutes, this candle go, close red again down into the middle of this range. So I'll put it up here at 68 1/4, and we'll see how gnarly it could get if it actually sometimes what they do is, as they're getting close to the candle, the close of the candle is sometimes when they'll actually come in with their volume, and that could be in either direction, right? But if this is like a downtrend right here, then in theory we should not violate this bar at 68 1/4. And then if the downtrend is going to continue, then we've got plenty of room. I mean, that's not the issue, right? Just whether or not there's any actual trending kind of momentum to be had this afternoon. Like I said, maybe we could get, or do we just continue to go kind of sideways and do nothing here? But watch what happens in the next couple minutes. This is important to how you see what crude is rallying into the close. The 12:30 NYMEX close, that's mountain time. So in comes the volume on the crude side. They're covering their shorts. Why wouldn't you? I mean, how could you be short 73, 74 going into the weekend? Like, really? You think it's going to go down another 10% just to fill that gap? Like, whatever. 76. Come on, crude, let's go. Keep ripping. All right, we're getting close. 40 seconds. And then this could be the good reversal setup. A 15-minute doji right here. They could, you know, they've come down like this. They could easily squeeze us into the close on the short side. I think it's going to go like this. And it could go, again, it could go a lot further through if the YM can break. If you start to see everything breaking at once, then yeah, be careful. I think you've got a really good chance at trading down to this pivot again, which was this spot here in the overnight low. If it gets there in a hurry, it may not hold, especially if the YM has already cut through. So watch that closely as this trade develops. And if you want to try to hold a runner, you know, I mean, if you've got a couple, you know, whatever your unit measure is, if you've got multiple contracts, it's easy enough to try and buy, like, say, at 50 level, because those nice roundy numbers are often pretty good for the ES. But then I'd be targeting that 32 level. What was it? 32 for the pivot. Okay, and then it's yesterday's low. And I mean, we still have an hour and a half. What if we take out yesterday's low? You know, we could target the 50-day at 73.26 or 73.43 is where that comes in with the projected slope. This is where I was saying, when you get this rejection right here, comes down and prints a closing candle down here, gives a quick little pop to short. I mean, you have to be really quick, but if you get that short right there, you've got a 5-point stop, 4 or 5-point stop, and then you want to see it break. On the NQ side, though, you've got a nice test now of this same moving average on the 15-minute. And again, it's only support if the buyers step in. So there are times when, instead of it holding, there are times when it just slices right through. So be ready. it really wouldn't surprise me either way, whatever it does here. But I have a feeling it's going to close on the lows. In RTY, maybe that's the way to be playing like a pair trade or a spread is long RTY, short NQ, short ES, and long crude. Here's our YM. Let's pull this up on a bigger chart. Show you guys. This is kind of, it's pretty weak looking right here. Right? So if the high of the day is in for YM, move my box down like this. The potential is to break this ledge, break these lows, and all you're doing is you're not even filling this gap, you know? All you're doing, if you can fulfill this ATR, is you're basically filling that high point from last Friday, if it happens that way. See what the NQ looks like. I mean, there should be lots of support here. If there's any room left to buy anything in these portfolios, you know, then they can, if this is our low of the day, and they push this up, we could go out to new highs. If instead it failed right here, because look at this was support here, right? Held right there. Then when it broke through, right, gets all this downside pressure, gets all the way back up magically, right, to just under what was support is now resistance. So who knows? It won't change. If it's still resistance and the sellers come back in, you know, that's what it looks like. So you can move this down and you could say, if we go into a sell program through the end of the day, just targets yesterday's lows. It doesn't seem likely when you lay it out like that, when we have an hour and 20 minutes left. These things can be funny sometimes. This one I hadn't even moved. I had it centered on yesterday's Globex session close, and it traded perfectly to the high point of the box. So this is half the range. And so again, it's just who's anxious here going into the weekend, buyers or sellers? So we can move this up slightly if we want to just put it on that top tick. And that way, look, that's pretty precise, right? From that top tick is 81.5. 81.5. That puts the low of our box, our 5-day ATR box, at 42.5. And guess what this closing print was? 43, I believe. No, a little off. 36.25. I was about to say, like, that is just precision. It's sort of not coincidental. It's just mathematical. See what the RTY looks like.